Good morning, Chuck.
Dale Carnegie said, most of the important things in the world have been accomplished by people who have kept on trying when there seemed to be no hope at all. Arise, champion. Now perseverance transforms average, everyday people into world champions. So the key to victory, the key to success is never giving up. And in order for you to do that, arise, champion, you're gonna need a strong why to prevail, a strong reason to keep going. You see, the more difficult your obstacles are to overcome, the more you must keep your reasons for succeeding in front of you. Vince Lombardi said, the difference between a successful person and others is not a lack of strength, not a lack of knowledge, but a lack of will. Success is not about how you look on the outside. Rise, champion. You might look like a Lamborghini, mean and clean, everywhere you go. But see, I'm interested in what's under the hood, cause that's what really matters. When life hits you with that brick, and you get knocked down on that mat, and I'm talking to the Linda Rouseys of the world, the ones that have been knocked down once and twice, and everybody out there is calling you a failure, everybody out there saying it's over, what are you gonna do? Rise, champion. I don't even think they should be able to call you a champion until you've been beat. Because even losers keep going when they're winning. But when you get hit with that brick and you on that mat on your back, rise, champion. Then we separate the cream from the crop. Only when you're down 25 points on the biggest stage like Tom Brady, and you come back, can we call you the greatest of all time? Abraham Lincoln said, I am not concerned that you have fallen. I am concerned that you arise. Champions make adjustments, not excuses. Get up! The ground, the mat, being on your back is no place for a champion. Get up! Arise, champion. Now you at that crossroads. The decision you make now will ultimately define your legacy. I'm speaking to the Tiger Woods of the world. Each loss, each setback, each heartbreaking disappointment will try to disguise itself as failure, but it's all a lie. And let us not grow weary of doing good, for in due season we shall reap if we do not give up. Many times on the road to success, you're gonna feel crushed, exhausted, and alone. See, life is not like Little League. Arise, champion. They don't give away participation trophies. There's the champions and everybody else. It's one or the other. How do you want to be remembered? Each time life knocks you down, arise, champion, you must bounce back with an even greater hunger to succeed. The ones that have the hardest time doing this are the ones that have weak whys. Now you can only go as far in life as your why will carry you. Champions have self-awareness. They know why they want what they want, and that why carries them to the promised land. The why is the birthplace of all champions. She is the mother to all legends and all the greats in every field. The more deeply you are connected to the thing you're trying to accomplish, the more likely you are to achieve it. Natural talent and ability, that's all good, but it won't carry a quitter. So you gotta find a why that makes you invincible, that you can run through walls with it. Get up! Nietzsche said, he who has a why to live for can bear almost anyhow. And I'm not ignoring what you're going through. Get up! And I'm not gonna sit here and lie to you and tell you it's gonna be easy, cause it's not. It's gonna be a struggle. You're gonna have to fight and claw and scrape your way up out of this thing. But you can do it if you wanna do it. Now, are you a pretender or are you a champion? You can't have a testimony without first having a test. The whole world is watching you right now. Get up to see how you respond. Show them what you're made of. Never give up. Dale Carnegie said, most of the important things in the world have been accomplished by people who have kept on trying when there seemed to be no hope at all. Arise, champion. Now perseverance transforms average, everyday people into world champions. So the key to victory, the key to success is never giving up. And in order for you to do that, rise champion, you're gonna need a strong why to prevail, a strong reason to keep going. You see, the more difficult your obstacles are to overcome, the more you must keep your reasons for succeeding in front of you. Vince Lombardi said, the difference between a successful person and others is not a lack of strength, not a lack of knowledge, but a lack of will. Success is not about how you look on the outside. Rise champion. You might look like a Lamborghini, mean and clean, everywhere you go. But see, I'm interested in what's under the hood, cause that's what really matters. When life hits you with that brick, and you get knocked down on that mat, and I'm talking to the Linda Rouseys of the world, the ones that been knocked down once and twice, and everybody out there is calling you a failure, everybody out there saying it's over. What are you gonna do? Rise champion. I don't even think they should be able to call you a champion until you've been beat, because even losers keep going when they're winning. But when you get hit with that brick and you on that mat on your back, rise champion. Then we separate the cream from the crop. Only when you're down 25 points on the biggest stage like Tom Brady, and you come back, can we call you the greatest of all time? Abraham Lincoln said, I am not concerned that you have fallen. I am concerned that you arise. Champions make adjustments, not excuses. Get up! The ground, the mat, being on your back is no place for a champion. Get up! Rise, champion. Now you at that crossroads. The decision you make now will ultimately define your legacy. I'm speaking to the Tiger Woods of the world. Each loss, each setback, each heartbreaking disappointment will try to disguise itself as failure, but it's all a lie. And let us not grow weary of doing good, for in due season we shall reap if we do not give up. Many times on the road to success, you're gonna feel crushed, exhausted, and alone. See, life is not like Little League, a rise champion. They don't give away participation trophies. There's the champions and everybody else. It's one or the other. How do you want to be remembered? Each time life knocks you down, rise champion, you must bounce back with an even greater hunger to succeed. The ones that have the hardest time doing this are the ones that have weak whys. Now you can only go as far in life as your why will carry you. Champions have self-awareness. They know why they want what they want, and that why carries them to the promised land. The why is the birthplace of all champions. She is the mother to all legends and all the greats in every field. The more deeply you are connected to the thing you're trying to accomplish, the more likely you are to achieve it. Natural talent and ability, that's all good, but it won't carry a quitter. So you gotta find a why that makes you invincible, that you can run through walls with it. Get up! Nietzsche said, he who has a why to live for can bear almost any how. And I'm not ignoring what you're going through. Get up! And I'm not gonna sit here and lie to you and tell you it's gonna be easy, cause it's not. It's gonna be a struggle. You're gonna have to fight and claw and scrape your way up out of this thing. But you can do it if you wanna do it. Now, are you a pretender or are you a champion? You can't have a testimony without first having a test. The whole world is watching you right now. Get up to see how you respond. Show them what you're made of. Never give up.
Morning. What's going on? Good morning. How's everybody doing?
Doing good, Chuck. How are you today?
Pretty good.
Good morning, everybody. I'm doing good.
Trying to turn my volume up. Good morning, everybody. Thank you again, Chuck.
Good morning, Dr. Flax. Morning, Mr. Fred Burns.
What's up, man?
Oh, man. Another Saturday, man, in the movie hiding from Rona.
Good morning, everyone.
Good morning.
Right. Well, I had a couple people reach out to me that would like to teach this morning. I don't see one of them on. Fred is one that is on. So what I'm gonna do, just as I usually do, I'm gonna go ahead and I'm going to teach it. Most of the people on here have been exposed to it at least once and also have access to prior training. So I'm not going to go into crazy detail, but I will go through enough that if this is the only one they're on, that they would at least have the foundation. I'm gonna go ahead and get started. Now, here we go. Let me go ahead and share my screen. And those that are not muted, I'll go ahead and mute out for now until we until you have a question or comment. And then I turned off a couple of you guys' cameras just so that when we have the recording, it's only one face they're seeing on the recording unless that individual's teaching. That way it's just not distracting. This was a good week for me. In church, we always ask, anybody have any testimonies? That's what I want to ask you guys. Anybody have any testimonies? Anybody using a strategy? Want to share out before we get started? Things you learned, whether good or bad. As far as when I say bad, just wins or lessons. I had a week of lessons last week that took me into a week of massive victories this week. So those lessons are important, but I just wanted to check in and see if anyone had anything they wanted to share out before I get started. I know my girl Delisha, she's been killing it.
Yeah, I for the past, I want to say maybe 2 weeks, I switched over to the ORS Aggressive, and that's like, it's been giving me sniper entries. It's been crazy. I get signals from different IM products, and plus the team that I'm a part of on IM. But what I've been doing is using ORS truly as the system that it's been designed for, which is to validate the setups. And when I switch from the conservative to the aggressive, especially on the GVP pairs, I've been, spot on using that Fibonacci. First of all, at the Ruby zone, it's just magical. That's all I can tell you guys. It's magical. And I've been able to catch 100 pips on one move, just in one trade, 100 plus pips. So it's really working. At least it does for me if I follow all the rules.
Yeah. Thank you for that. Anybody else got something they want to share out?
Well, you know, Chuck, I'm probably the newest person to the group, and I've been playing around with it in a demo group, and I just been on the demo site, and I just been fascinated with the level of accuracy. I've been frustrated with the kids a little bit because I've been missing some of those bomb entries because I'm homeschooling because we quarantined and all that stuff. But the system is A1.
Yeah. Yeah. A couple of y'all, I know y'all trying to do what you can with all the adjustments. It's a lot. I know that. I've seen a couple cool memes. Let me show you this one really quick. People having to laugh to keep from crying. Then I'm ready to go over here. This one is probably, I'll cut to the chase. This one's probably the funniest right here. You guys ready?
That
That's hilarious.
okay, so now I don't feel so bad because Kennedy, like literally my little work situation is in a corner like that woman's, and Kennedy keeps coming in, running in and out with our dog Max, and I'll tell her go and put him on the leash, and so he's not running around, but she won't stop. So then I'm like, if you don't stop, I'm going to tie you down. Oh my gosh, yeah. Shoot.
Yeah, it's been funny watching. The internet is, they always say the internet is undefeated, and it truly is. All right, you guys. For me, I just have to. You guys are great. I really appreciate you guys both jumping on these trainings, and even some of the times where you guys pull me to the side and ask questions, clarifying questions. And I have a few people on the call right now that for sure do that to me all the time. You guys are the question askers. It doesn't, just because you don't respond like that doesn't mean you're not learning. Delicia's pretty quiet, but she's taking her notes, so don't worry about that. But what some of these people are doing is they're pulling the little nuances out, and even having me emphasize certain things and break it down sometimes in different ways. And all it does is, one, it pulls on my understanding. If I understand it, my ability to break it down in multiple different ways, that right there is good. But then also it's having me be repetitious about the strategy and continue to say it, think about it, watch it. And all it's doing is building the experience and solidifying the experience in my mind. So it's like every time I teach it and go over it, and it's like, oh yeah, that played out again, and that played out again. And then for me, I don't know if you guys all know this or remember this. I've shared it multiple times. This journey for me, in the summertime, I reached my 3-year anniversary. And one of the things about it, I learned so many different things. I told you guys before, like I was the guy that I knew everybody's strategy. I had gone to everybody's class. I mean, I still, even now, not as much, but I average about an hour to an hour and a half of education a day. And back then it was worse. It was like 3-4 hours, right? So I was always learning and learning and learning and learning. And what would happen is, you're in these groups, and now this person's like, go do this strategy, and this person like, go do this strategy. Essentially, end up with all these different strategies and different ways of looking at the market. And what I ended up doing is, I have literally arguments in my mind. No, wait for this. No, okay, right now it's good. Nope, it's not, because I need to wait. Like, it's all these internal arguments because I have all these strategies in my mind and ways to approach the market. So for the last probably year or so, right, we started trading the RS strategy at the beginning of 2019. And the last year, I've been basically doing the same thing for a full year without really making too many changes. And so what I see here is it's been a deconstruction period for me, right? Deconstruction period in time for me. And I'm now getting to that phase where I've got kind of filtered out the noise. And here's my point. I teach you guys, right? And I share this with you, but also for me, there's times I'll fall back into old habits, old mindsets, instead of just trusting my strategy. And so there was the week before, so we're not last week, but 2 weeks ago when I had testified to you guys, I had about 26% growth on my account for the week, which was awesome, hit my goal. But then the following week, I gave it all back, right, to the market. And then on one of my accounts, I gave even more back to the market. So I broke even on some of my accounts, and then the other one, I gave even more back. Well, looking at what happened, right, it wasn't necessarily that I was wrong. It was my execution and how I was actually going about. My overall analysis was good. And I just dissected, and I encourage you guys to not just lose trades and then walk away and say, oh well. I want you guys to journal, really. Journal yourself, journal the trade, review it. Look what happened. Look what you missed. Oh, that was a supply zone. I wasn't paying attention. Oh, it bounced off this Fibonacci level and I didn't see that. Whatever it may be. Oh, I didn't wait. I wasn't patient. I didn't let that candle close. Whatever it is, keep track of it, right? And learn from it. So this week, right, I came back, I refocused, and I got my mind back into position. And after coming out of a couple one-on-one sessions with Stella, Troy, Fred, right, and our Saturday call, I'm telling you, had everything. When you guys get that kind of heat from me, it's because I got to give it to myself, right? Because I got to come in with a different level of focus, because a lot of times I've learned some things. I'm like, I got to give it to you guys so you guys could be on the same page. And so that's what really came out. Well, past profits don't guarantee future profits. What I do doesn't mean you'll do it, right? But what I will say is, instead of ignoring some of the signals and the entries and all the different things that come from our strategy this week, I said, I'm just going to take it. I'm not going to overthink it. Take it, meets our qualifications. Let's go. And so from Monday until Friday, I basically took my account up 223%. Okay. And that was because I locked in and I just followed the steps. And I'm telling you guys, like, if it's 10%, 15%, 20%, 5%, 2%, whatever, I'm telling you, if we trust the strategy, right, and just keep on just showing up to the chart, right, put stop losses in the right place like we're going to teach today, we have an edge. Mark Douglas talks about having an edge. We have an edge. Our strategy gives us an edge, okay? From there now, it's just the mental game, and us executing and really trusting the probabilities, okay? We're not gonna win every trade, okay? I'm telling you, even when you're running really high percentages of wins, you gotta accept the losses. It's okay. I could lose this trade. Doesn't matter, right? I'm gonna go ahead and take the next trade. Take the next trade. Take the next trade. And I'm telling you guys, once you embrace that mentality, take the next trade. Does it fit our system? Use it, because you gotta remember, we're gonna go into this. Everything in our strategy, right, is important. Everything in our strategy. There's nothing that's really not important. Everything means something, and it's a valuable piece to the puzzle, okay? The market will not change directions, will not go anywhere unless there is a change in the strength and the weakness of those pairs, okay? Nothing is just happening randomly, right? And we're going to get into the fib levels, but those fib levels are repeatable things. I know that we're in a season of chaos and and panic and fear and a lot of emotion, right? Emotional decisions that are happening in the market, people are responding. But I'm telling you guys, the fib levels are still playing out throughout all the emotion. The stock market's dropping like crazy, but then all of a sudden it stops. They passed the stimulus bill at the exact place they need to stop, right? Everything is like it's connected, right? We draw out a gold zone on the stock market off of a monthly chart, and it came in and respected it perfectly and pulled up, right? All of these different things are working together, and they're working together for our good. So that's just my own personal feedback to you guys. Hopefully it encourages you. I sent Troy last night. I just had to, like, because I had been sharing a couple of things I went through, and I was like, okay, today I did this on Tuesday, Wednesday, Thursday, Friday. And it was kind of crazy just looking at it, because I take screenshots of my trades. And I was like, man, like I didn't even try to get I missed so many trades, and I still have well over 1,000 pips this week. Okay, so that's my my motivational moment for you guys, and I'm really proud of you guys. Thankful for you guys taking this journey with me. I told them they're gonna make a movie after us called Quarantine Millionaires, and I think that's gonna be us, man. We're gonna get this money and move our families forward in this situation. All right. So again, past profits don't guarantee future profits. Forex has risks. You can lose all of your money, and never invest money that you cannot afford to lose. With that being said, let's get it, y'all. Here we go. We know that the market does not move in a straight line. We know that. Okay, so for my teachers that will come on after me, right? Main things I want you to cover, again, are going to be what I'm about to say right now about the Elliott waves, okay? We're going to talk about the Fibonacci and why that matters, essentially. And then you just need to be able to explain, essentially, currency strength, our moving averages that we use. Okay, you don't have to give a teaching on it. If that part's okay, just give essentially the theory behind it. Below, above, all those things across is what we're looking for, that they show us the trend of the market. And then our MACD, okay? And the different selling and buying moving average cross and zero line cross, all right? And then the steps of the strategy, all right? So I'm gonna go through it. And again, let me make sure, I do not see anyone brand new. So I'm gonna try to actually teach it the way that I would have you guys want to teach it, all right? Other people can refer to an older session for more detail. All right, here we go. So market is not moving straight lines, all right? We know that now. And what happens is the market moves like this, in impulses and corrections, right? That's what we see. We can look down here at price action, we can kind of see this similar thing, right? Impulses and corrections, impulse, correction, impulse, right? There's a lot of that going on. It never just really moves in a straight line. Now, the thing is though, is that inside of these impulses or corrections, or impulses and corrections, there are also waves within the wave, essentially. So like on a higher time frame, you may see this, but then on a lower time frame, you'll break it down and it'll look something like this, right? And then I could go in on even a lower time frame, and we could see that there are waves within even the smallest impulses, right? All the way down to the 1 minute. And so what happens is, because this is happening, we want to take this information and essentially use it to our benefit. Now, our strategy, right, is designed to catch what we call, so the strategy ORS is designed to catch two things, right? Catch the major reversal and to also catch the continuation after a pullback, okay? Now, when we talk about major reversal, notice how this has been moving up like this, 1, 2, 3, 4, 5, right? And a major reversal would be when we actually go the other way, right? And take it all the way down and sometimes even further, right? It's the major reversal of a move. Now, the continuation play is where you have a move up, right? We don't catch that, but we catch the continuation of that, okay? We don't catch that one, but we catch the continuation of that, right? It's designed to help us catch the continuation, right? So we can catch the major reversal or the continuation after a pullback. Now, to do that, we use a couple things, okay? To do that, we use a couple things. Now, one of the first things that we use moving averages, okay? We have two moving averages. We have one that is simple, right? And then we have one that is exponential, right? Now, our exponential one is 4. And all that means is that it's going to be averaging out the last 4 candles, okay? Doesn't matter the time frame. So if you're on the 15-minute, this is the average of the last 4 15-minute candles, okay? If we were on the day, a lot of people say it's the 200-day, right? That's because they're used to looking at things from a daily perspective. From the 15-minute, this represents the last 4 15-minute candles. Now, on our template, what we have, that's our white, okay? Now, our other guy, right, that is going to be 20, our simple moving average. Again, 20 candles, that's the average of 20 candles. Okay, that's all that we're talking about. And that guy is blue. Okay. Now, here's how moving averages work. Generally, you're going to combine a fast moving average with a slow moving average. Okay. And when they cross over, cross down or cross up, what they represent is essentially change in direction, okay? One of the things that we want to do, and what makes ORS so powerful, is that we use it to, instead of trying to catch the major reversal all the time, to catch the continuation. And so we can utilize our moving average crosses to make sure that we're in the right direction of the cross, all right? The right direction of the momentum, of the trend. I always tell you guys that our moving average is like a lazy man's market structure, okay? I don't have to come on here and draw a trend line. I can see that the market is bearish right here, right? So our white right here runs within the candles. I get a 4 crossing down, and I have a 20 moving average, a slower one, 4 crosses down. This would be a bearish indication. In the same way up here, right here, where we had this white candle cross up above, this would be a bullish candle, or a bullish impulsive move, all right? So white above blue, we're bullish. White below blue, we're bearish, okay? Now, the other indicator that we use, or at least we use the mindset of this indicator, we actually use another indicator, and I'll show you what we use in a second. We use the currency strength, okay? I made a statement earlier in the call saying that our indicators really give us, and they have everything essentially that we really need to interpret direction of the market, okay? Now, the market is really, I like to refer you back to our chart right now. We are trading the British pound versus the Canadian dollar. And that's, I like to say it like that because You want to think of it as them being in competition. This chart is representing what's going on with them, right? Their relationship. Now, when the chart is going down, price action is going down, the pound is losing strength against the Canadian dollar. When it's going up, the pound during that period of time is gaining strength against the Canadian dollar. That's what's happening. So it's really just a battle between strength and weakness, okay? The advantage that we have with this indicator down here is that it shows us, right, what's strong and what's weak, which currencies are strong, which currencies are weak. All of these different colors represent a different country. Now I'm gonna go ahead and zoom in to right around here. Okay, right around here, I want us to focus in. And in this area right here, we have essentially one that is more weak. Now, the way this works is the higher you are, the stronger you are. The lower you are, the weaker you are. So in this area, this pink guy is pretty weak, right? It's the weakest of the crew. And this orangish type, it seems to be the strongest at that period. Okay, and what I could do is I could come in here and I could essentially determine who those people are. So it looks like the Japanese yen and the Australian dollar. If I take off everybody else, we can see, there you go. Now, what is it saying? Check it out. Around here, right, all the way over there, we had the Japanese yen enter into strength, and we had the Canadian or the Australian dollar go into weakness. So one of the ways that you could use this is if you were looking for other trade opportunities, you could pay attention to who's the strongest and who is the weakest at that time and pair them together. What are we trying to do? We're trying to exploit. Exploit is the word you want to leave in your notes. We're trying to exploit strength versus weakness. I tell you guys this all the time. This is the only time I approve of bullying. Okay, we're going to let the Japanese yen, right, bully the Australian dollar. All right, and that means we're trading AJ, right, odd JPY. Okay, we have a strong yen and we have a weak odd. So what would we do? We would sell odd JPY. Look for sell entries off of odd JPY. Now, we are on pound CAD, so we don't really care about what's happening with odd JPY right now. We're gonna look at pound CAD and their relationship. And now I wanna bring your attention over here, okay? Now, look right here. This is where the Canadian dollar went strong. That's the red currency. This right here is where the pound went weak, right? They crossed up. Okay, there was over here, the pound was strong. Canadian dollar was weaker. But right here, the Canadian dollar went really strong and the pound went really weak. And we can look up here and we can see the corresponding action right there. All right. Same thing is being represented here. I can see that the market moved down right at the time that this thing crossed over. Okay? So this is a very powerful indicator, and it's important for us to understand because we want to move with the momentum, move with the strength of the market. All right, we don't want to be going against what's happening. So we use this to interpret. Now, this guy loads very slow. So when I click right here, you see we're waiting. Okay, we're gonna stop waiting because I'm gonna bring in the other indicator that we now use because of the speed of it. You see, I just loaded on my chart and it's already there. Okay, I load on my chart and it's already there. We're still waiting on the CSA. So go ahead and delete that off your screen. But I want to show you right here, we can see the same thing. Now, what I've done is I have customized my vortex indicator so that for me, whenever I look at this chart, right, the blue is always my base currency, all right, my base being my pound. My white is always my quote currency, all right? So what's gonna happen is the base, when the base crosses below the quote, the market should drop. And as you can see right here, that's where it crossed down. And then the market dropped. It pulled back up right here when the base gained strength and the quote gained weakness. And you can see it went on up, okay? So we use the vortex. And the way you customize this, if you would like, you can come in here and change these to whatever colors you like, okay? For me, when you're looking at my template, you're gonna see this blue and white, and that's going to always be my base, the blue, white. Now the input is going to be 7 for our strategy, okay? So this is going to take the average strength and weakness of the last 7 candles, okay? And we use 7 just because it turns a little bit quicker, all right? Now, 7 is what you want to have there. And lastly, we have one more indicator, and that is our MACD 4C, okay? And all you got to do is come up here, type in MACD, and then look for the one by BKNO422 signal line squatter, all right? That's the one we want. So go ahead and click on that and bring it onto your screen. We do not need to change any of the period, the lengths, okay? We'll leave that alone to the default 12, 26, and 9. Now, here's something you want to understand about the MACD. It stands for Moving Average Convergence Divergence. So one of the things that it's showing us is when there's a change of direction, moving average crosses, okay? What it's also showing us is when we have convergence. Convergence is when we have essentially price action demonstrating one thing, and we also have corresponding, right, where the MACD is showing the same thing. I'm trying to look for a good example of convergence. This would be a cool example right here. You can see that there's a low right here, low, and then the market pulled up. There's another low, and the market pulled up. Another low, and the market pulled up. In other words, we are creating lower lows, right? Now, convergence would be in the MACD, where we are also creating lower lows. So each of these points, essentially, in this histogram, they are representing what's happening up here, okay? And you can see that they are both doing the same thing, creating lower lows. And then as it moved up, what did it do? This moved up, and so did our MACD, okay? So we need to be able to see this stuff in our MACD. That's exactly what we want to see, all right? That's convergence. Now, divergence looks more like this, where right here we have a high. We have a high that's a little higher, high that's a little higher, and a high that's a little higher, okay? So essentially, it's doing this, okay? It's doing this. Now, right here in our MACD, it's doing this. So these mountaintops are getting lower and lower while this is going higher and higher. This is divergence, okay? So our MACD is gonna show us convergence and divergence, all right? That's very important. Now, the other thing that our MACD shows us are times when the market changes directions or starts to lose momentum. And one of the things that we have are what we call moving average crosses. This histogram is just another visual form of a moving average, okay? So what happens here is you have 2 moving averages here. If I go into the indicator and switch this to a line, right? Now you can kind of see this a little bit better. It looks more like that, right? Now, what we have here is when green and red cross below the white, that indicates a sell, Okay, so when you have green and white cross below the green and red cross below the white, that indicates a sell. When you have red or green cross above the white, that indicates a buy. Okay, very simple. Sell right there, sell right there, buy right there. Okay, so that's one of the things that we have. Now, something else that's very important is the color that we see on this MACD. Right here in the middle, this is what we call the zero line. And the zero line is letting us know when there is a shift in the momentum, okay? When we have officially shifted in momentum and also broken structure, okay? Now, what's happening here is green is bear or bullish momentum, red is bearish momentum. So in other words, we say like this right here, it's sold, it crossed down, but it's in bullish territory. So here's what we have to think. This could be the beginning of a long sell down, or it could simply just be a pullback. Like for instance, over here, this was a selling indication, but as you see, it didn't really come down deep into our bearish territory. A couple times where it came under and then just stayed up, pretty much just flatline. And if we look at the market up here, the price action, we can see really what happened. Down here, we crossed up and created this high. So we came on out of there. But ever since then, we pulled down, but look at price action. It really just kept going up because this was a bearish cross, but it was above, right? It was above the zero line right here, all right? So that's something that you wanna understand, that this happening, right? Selling happening in bullish territory could simply only mean that the market's just pulling back, it's taking a break. But it doesn't mean that it's coming down. It could just be still making its way up. Okay, so that's how we use it. That zero line is important. All right, so MACD again, you want to be able to identify where these crosses take place because they represent a change in the direction. Now, I want to lastly talk about how we use Fibonacci. Excuse me, let me get some water. Now, the way that we use Fibonacci is we use Fibonacci to help us catch the continuation, okay? To catch the continuation. Remember we said that the market makes impulses and then makes corrections. So for instance, right here, we have an impulsive move to the upside. And I will use the arrow right here so that you can see direction, all right? We have over here what's called the Fibonacci retracement tool. So we have that, we have this impulsive move up. Now what you want to do with the Fibonacci retracement tool, and if you don't see yours, it's probably still under this pitchfork tool right here. Go down there and grab the fib retracement. And the way it works is you use it by starting from the left side, right, and going to the right side. That could be up or down. You want to start with the left of price action and going to the right. Now what you're looking for are the swings, right? You're looking at the impulsive moves, but you're looking for the swings. So for instance, this is an impulsive move up, so I'm gonna go from bottom to top, left to right, okay? If this was going down, I would go from top to bottom, left to right, and here's what we're looking for. We're looking to see how far the market will pull back, okay? That's what we're looking for. Where is it gonna stop, right? That's what we're looking for. Where is it going to stop and then go do its thing, okay? Now, our fib, you want to have these parameters inside of your fib. So what you want to look for, you want to have the 0, the 38.2, sorry, the 23.6, the 38.2, the 5. It does not matter where you put these all in a straight line. They can be all out of order, but these are what you want. Again, the 0, 0.236, 0.382, 0.5, 0.618, 0.786, and 100, okay? You also want to have 0.886 and 0.835. And what we've done is we have color-coded these because they represent something different. So all of mine that are not really that relevant, I have them as white right now. And then my 61.8 and my 5 are yellow, while my 78.6 and 88.6 are like a pinkish ruby type color, okay? And so we call the zone here between our 50 and our 61.8, we call this our gold zone, okay? And right here, between our 78.6 and 88.6, this is what we call our ruby zone, okay? Now, we use this to take trades and catch the continuation. So all we're gonna do is we're gonna look to see, to take a sell. Why a sell? Because we had a bearish impulsive move. We're looking to take a sell off of our gold zone, or we were looking to take a sell off of our ruby zone. So what we're gonna do is we're gonna use ORS to qualify our trade entries off of these zones, okay? We're looking for price to react in these areas. Okay, now, let me give you now the steps. We have 5 simple steps to our ORS strategy, okay? 5 simple steps. We call this ORS 2.0. And actually, this is our conservative steps. So we're gonna start to identify what these are. This is our conservative steps. This is going to be best for catching longer plays in the market, okay? This is gonna get us into trades that are gonna go usually a lot further and a lot longer, okay? Now, this right here, our first step, okay? Our first step is that we are waiting for a cross, right? We're waiting for a cross on our vortex, okay? So we set an alert for that. So we're waiting on a cross on a vortex, and we're gonna set an alert for that. Number 2, we are going to drop down to our 1 minute, and we're going to confirm that we have a 420 moving average cross, right? Number 3, I'm just gonna bring everything over right now. Number 3, what we're gonna do is we are going to wait for what we call our retest on the 1 minute MACD. And then what we wanna have is, that's represented by having an opposite MACD MA cross and then a reconfirming one. I will break this down in just a second. Step 4 is check for our 5 minute MACD for a confirming cross and 0 line break. Remember, this is our 0 line break, so we're looking for this to go from red to green or to go from green to red. That's what we mean by 0 line break. And when we say confirming MACD cross, we're speaking of these crosses right here. So if I'm looking for a buy indication, right, I need this red to cross up above the white, okay? Or if I'm looking for the sell, I need that green to cross below the white. And then lastly, we exit when we get an opposing MACD cross on a 5 minute or a 15 minute, all right? Now, let's break this down. everything begins with our 5-minute vortex. So when I said set an alert, you can go on here, go ahead and right click on it. You can add an alert. You want to have VI plus crossing VI minus. Okay, and we want to put once per bar because this is going to alert us to when they are about to cross. Okay, sometimes what it'll do is it'll kiss, but it won't cross. But we want to be there for when it crosses. If you wait for the once per bar close, then you may be a little bit late. Okay, so you want to be there for when the candle is closing. Right here, you can notify your app, show on a pop-up, and also you can play a sound, right, that you want. Down here, you can actually customize this and change this to whatever you want, right? Time to get the money, whatever you want to put there, right? You can do that. It's all customizable, okay? So you're gonna create that. And what it's gonna do is when you get a cross here, it's going to alert you, okay? So what we're gonna do, we're gonna look at this cross right here, okay? So I'm gonna come down and check this guy out right here, okay? So what we're gonna do is we're gonna wait for a 5-minute cross that we have right here. Now that we have that 5-minute vortex cross, what we're gonna do is we're going to drop down to our 1-minute time frame. And what we want to confirm is that we have a confirming moving average cross. What does that mean? Well, what happened on our vortex? It crossed up. So that was a bullish indication. We want to make sure that the 4 is above the 20. 4 is above the 20 for the buy. That is correct. We do not want to trade against the 1-minute time frame. All right. Now, after that, what we want to do is we want to move on to our step 3. Here's our step 3. Our step 3 is this. On the 1-minute MACD, we want to wait for a retest. Okay. Think about market structure. Usually you're going to have a breakout and then a retest. The reason we're waiting for the retest is so that we don't get caught in the pullback. So we're going to wait for the retest and we're going to use our MACD to confirm that retest. And here's how it works. You see right here how our MACD crossed up. How our MACD crossed up right here on our 1-minute. Now, when it's above our white line, it's on a bullish move. But what we want to do is wait for it to cross down below our white line. Okay. We're waiting for it to cross down below our white line. And I think it's kind of trying to cross, but let's see. Yep, there's a cross. Okay, so you can see it. It came underneath. Now what we're waiting for is for it to cross back up. Okay, there's our cross back up. Now once we get the cross back up, what we are looking for, we can move on to step number 4. Step number 4 is that we're checking the 5-minute MACD to make sure that we have a confirming MACD cross. But we also want to have what we call a 0 line break. So we're waiting for this to break the 0 line. All right, there's our break of the 0 line. We can go ahead and mark this off right here. Now, what we also need to make sure is that we have also on our 15-minute that our MACD has crossed. So what we want to have is our moving averages on our MACD 15-minute cross. And you can see right here, the MACD has crossed on the 15-minute. Okay, so if all of those things are in place, then what we can now do is we can take this trade. And what we need to do is put our stop loss below the price action on our 5-minute time frame, right here. So stop loss here. This will be our entry. And we can take the trade. Okay? So we'll go ahead and take this trade. We can exit when we get an opposing MACD cross on a 5-minute or 15-minute, okay? Or you can just use market structure. But for those that want to confirm, okay, is this trade really, really over? You can use your MACD to confirm it. The other thing you could try to do is just look for structure. So some people may look left and say, you know what, I think the market could come up here. So I'll aim for that. It's whatever you want. But again, we do have an exit signal that we have implemented. So we play this out. And right here, we had our 5-minute MACD cross down. So that could have been our exit out of the trade. Now, it would have only taken us up a little bit, and as you see, about 20 pips. But then it decided to come down further, push back up, come back down, right? Now, what do we also say? Our 15-minute can be a close, an exit too. And look, our 15-minute has not changed. So our 5-minute has, but our 15-minute has not. So you can pay attention to what's happening on both of these guys and make determinations on what you want to do with your exit, okay? One of the things we want to pay attention to for sure, look at the market structure here. We do not have to panic, right? Unless the market breaks back below this area. So as you can see, it simply was a break and a retest, okay? A break and a retest. So now we play this out more. And still struggling, right? Let's go ahead and check our 15, because our 5-minute has crossed several times. There's our 15-minute cross, okay? So you could have exited the trade if you wanted to based upon that. And again, you're still floating around that 20 to 30 pip range, okay? Now, did the market finally get there? It did. And so again, you can use market structure as an exit as well. Here's one of the main things. So you want to just, I probably never said this, but remember what our MACD represents. Our MACD represents from this zero line, this represents some type of break of structure, especially when it pushes off of it, right? Especially when it pushes off of it. So what you want to do is you want to identify that area and mark it off. Don't just use that as your entry. Use that as a guide, right? Use that as a guide to actually pay attention to. If the market does not come back down this area, right, then most likely it's still going to just continue. What we just had is consolidation at the retest area, and then it pushed up. That's all it really did. It just like put us to sleep for a bit and then finally took off. But as you see, we don't really have to overreact even to those MACD crosses if they are happening above structure, okay? This is a nuance. So write it down in your notes. Make sure you get this point. Make sure you understand this. If there has not been a change in market structure, then those 5-minute and 15-minute MACDs, right, they can be taken with a grain of salt. Because what we have to do is worry about the break of structure. So if all these things are just happening up here and we have not shifted, then consider this trade to still be doing what we wanted it to do in the first place, okay? And now as you see, it's moved on up right here, okay? So it's moved up about 79 pips. You had to wait it out, but it happened. Okay, I'm gonna say that one more time. Pay attention to where those zero line breaks happen. Notice that the zero line breaks are happening at areas of structure, okay? Areas of structure. When this thing crossed up, it crossed up right here. Where were we at? Look at this bearish engulfing candle right here. Okay, that bearish engulfing candle right there. We retested it once, pulled down, and then we broke through it. So this has been defeated. This zone has been defeated. But What happens is when you disrespect the zone, what do you generally do? Come back and you pay your respects. So all that's happening is that's exactly what it did. So all of these crosses that were happening on our 5 minute, right? Nothing really changed. Even this break, zero line break, didn't do it here. It did it up here because it was also creating some structure right around here. So my point is start to pay attention to these things. The more you trade with our strategy, you're going to see little things like this, right? No reason to overreact, close my trade. I can chill out because most of this stuff that's happening, this back and forth that's happening, is happening above the structure. This is consolidation. This is consolidation. So what we had here is it pushed up to our next area. I'll go ahead and play it out and see it broke up above and it went a little bit further, okay? So that is our ORS conservative, okay? That's the 2.0 conservative. Now, for our ORS aggressive, okay? ORS aggressive, which is going to put us back into some of the entries we used to have when we were trading with the original ORS strategy, when we were using our fast 33 indicator. And here's how we're working. Now, check this out. In order for us to trade our ORS to aggressive, now when you guys teach back, you don't have to go into the details that I'm going into, okay? So what I want you guys to do is just identify that you understand Elliott waves, what our moving averages are, the vortex, currency strength, and those periods, and then just identify the steps, okay? That's gonna be the important thing, because I know I tried to not go into any extra details, but I couldn't do it. And I don't think it made sense anyway. So here we go, ORS 2.0, aggressive. In order to get this aggressive entry, right, what we're going to do is we're going to use all of the same components that we talked about, but we're going to shift everything down, okay? All right, we're not going to worry about our 15 minute in this case, all right? Everything's going to be based off our 1 and our 5 minute. Now, the only way that I can even think about taking this aggressive trade is that I have identified that the market is in one of our special Fibonacci zones, either our gold or our ruby. Okay, that's the only reason why I would even go about looking to be aggressive with our strategy. Okay, it's in our gold or our ruby zones. Now, the next thing that I must see, okay, that I must see is divergence or convergence, okay? Divergence or convergence. In other words, for sure, the MACD must be falling off. And I'm going to clarify that with the MACD in just a second. We must see divergence or convergence. Convergence can be fine, but we need to see that the MACD is falling off. We love divergence, but generally sometimes we'll also get just convergence. And usually when we have divergence, eventually we will get convergence, okay? Now, we must have Fibonacci hit, and then we must have divergence. Once we have that, what we are doing is we are waiting for a 1 minute MACD zero line break. All right, that's what we want. Once we get our MACD zero line break, confirm the 420 MA crosses there and the vortex, all right? These are all generally going to be there, but you need to keep that in mind when you see that 1 minute MACD zero line break, that also those vortex, the vortex cross and the 420 are there as well. Now, I'm just saying, generally it's all working hand in hand, but please just check around. Now, once we get the 1 minute MACD zero line break, we need to make sure that we have a 5 minute MACD moving average cross. Okay, 5 minute MACD moving average cross and vortex cross. If we have that, then we can go ahead and enter the trade. Our stop loss, will be above or below the structure. Okay, our stop loss will be above or below the structure. Well, let me say it like this: above or below the 420 MA cross on the 1 minute. And then it's on the 1 minute above or below structure. Okay, let me break this down. Once again, everything begins with a Fibonacci or gold hit. And then we must have divergence or convergence. And then we need to also then wait for our 1 minute MACD zero line break. We need to also make sure that that 420 vortex are with it. And then 5 minute MACD MA cross, vortex cross. We can enter the trade with our stop loss above or below structure. Let's check this out. So we're going to come over here and focus in on this area right here. And here's what we are doing. We are looking for divergence. Now remember what I said about divergence. Divergence is when you have the market doing one thing in price action, but in our oscillator, we're doing another thing. So look right here. Here's a low, high, low, high, low, high, low, low, all right? Notice what's happening with our lows. Our lows are actually getting lower, okay? This one is a pretty straightforward divergence. Our lows are getting lower. Our price action is getting lower, but look right here. This low right here corresponded with this low in our MACD. And notice how this is starting to go in the opposite direction. Okay, this is what divergence looks like. Okay, where you have all these lows going in one direction and this low is going here. What would just a naked trader generally think? Keep making lower lows, or you're still bullish, you're still bearish, you're still dropping. But what we can see is behind the scenes, something is happening. These lower lows doesn't mean that this market is about to fall through the ground. These lower lows are actually just happening in price. The price is becoming exhausted. Divergence shows exhaustion. So we're just going to actually identify that, okay? Now that we have divergence, the other thing that we need to have, right? Or I should start this off in the first place. We needed to identify that we were in what we call a Fibonacci zone, gold or ruby, okay? And let me show you. If I come down here, and I love to use our MACD, okay? Look right here. Lowest point in our red zone is right here. Highest point in our green zone is right here. So we're going to take the low of this area and the high of this area. So we're going to go right here. And we're going to go from left to right. There's our fib level. Now, what happens here is you usually want to identify, mark it off, your gold and your ruby zones. Okay. So what we see here is that the market has come into our, our ruby zone, okay? So we have divergence, right? Divergence in our ruby zone. And then we now start to look for our opportunity. So let me back this up a little bit more. So again, Fibonacci, we needed Fibonacci, and then we needed divergence. So we have our fib level. Now we need divergence. So check it out right here. This is where we had a 0 line break on the 1 minute. So that step is complete. What do we want to confirm? 4 is above the 20. It is. Vortex is up above. It's confirming it. Everybody's saying the same thing. Now, we're going to go over to our 5-minute time frame. And what do we need to have? A vortex cross, which is happening right there, and our MACD cross. If we have those elements in place, we can then go ahead and enter the trade. What did I say? You want to pay attention to where the 420 cross happened for our stop loss and the structure that's there. So the structure that's there is right here. So our stop loss is going to go right here. Okay. And now we can go ahead and enter this trade. Okay. So go ahead and enter this trade. And as you see, it really took off. Now, notice the difference. Aggressive entry got us in here with no drawdown, while our conservative entry still wouldn't have us in until over here. Okay, so you're talking about a trade that went 173 pips from our entry without any drawdown. That's how powerful our strategy can be. It's no guarantee that you're gonna get 100 pips, but what I'm trying to say, take the principle. The principle is that we generally will not have very much drawdown if we utilize our strategy and we wait for them off of our zones. That ruby zone is very explosive, very explosive. Why is that a very explosive zone? Because our ruby zone is also what we call a demand zone. A demand zone. All right, it is a demand or supply zone. Our gold is kind of like business as usual. I'm not going to go into fib teaching right now, but mainly focusing on the ruby, focusing on the gold, and look for our ORS opportunities, either aggressive or conservative. Now, let's just say you took this trade. Look how it came back to your entry. Remember what we said. What did we just say? Again, this is a nugget. Where that 0 line break happens, identify and always keep in mind that that is a structural change. So I don't have to really overreact to the market, right? If I'm trying to take this for the long haul because I think this may go up, then I'm not necessarily too caught up with anything unless it's breaking back below my structure. Okay, so some of my people that want to run these trades, right? Run these trades forever. There you go. You can sit in this trade for a while because the market never broke back below your structure. This is that structure that you want to pay attention to. Now that we have it pushed down, yeah, but look, it didn't close. It went down and it definitely didn't hit our stop loss. All right. So that's just a nugget for the people that want to hold these trades for the bigger plays, because they look at the price structure and they're like, you know what, it could go here, but I think I'm aiming for up here. Okay, so if you want to aim up there, that's fine. You're in this trade for like a day and a few hours, but you got there for 340 pips without any drawdown. When we talk about optimum reversal, being able to catch the major reversal, that right there is pretty sweet, right? We got in with 0 drawdown, except for that one time when it pulled back a little bit, right? We got in with 0 drawdown and we're able to take this trade up. I don't know where it went, probably stopped somewhere in here. Let's see. Nope, broke out. So imagine this was our trade that never hit our stop loss, but went up 700 pips in 2 days. So those are our 2 versions of our RS 2.0, okay? We have that conservative entry, and then we have the actual aggressive. Both of them were winners, okay? They're just different levels of aggression, all right? If you have a fib zone, do not be scared of the aggressive. Okay, it will get you into some of the best positions possible. Okay, if you're just kind of taking trades, which I don't really think any of us should just be kind of taking trades randomly, then you need to wait for more of a confirmed conservative 2.0 play. Okay, so that's it for me right now. Do I have any questions before we move on? Any questions?
Chuck,
Charles, you clarified a couple of things for me. Can you go back to the supply and demand zone? You said where the zero line, where the MACD crosses the 0 line, we mark that off as a as a structure. So even while it's consolidating, it may dip back as long as it doesn't dip beyond where it crossed the 0 line initially. Then we can stay in the trade.
Mm-hmm. So in that first example, that was right here. So we had that 0 line break on our, right here on our 5 minute happened right here. And what I want you guys to do is I want you guys to look around and look at the structure that's there when it does that 0 line break. In this case, it was a demand zone, supply zone, sorry, got bearish engulfing candles left and right, right? Market tested it and it broke up. So right here, just if we were naked trading, right? We're using our indicators to help us, not to harm us, right? If we're naked trading, what happened? If we're naked trading, this right here is a zone that we broke out of. This right here is a zone that we broke out of. And so what I'm trying to say is pay attention to those 0 line breaks, because if the market doesn't come back down past it, then it's just, it's just taking its time. It's not really done anything to really, freak us out. Same thing down here, market pushed up. Pay attention to those, sorry, right here. Market pushed up. Look, it just retested back into the area that it broke. That's just business as usual. Now, the cool thing about that is, watch this. Once you get that initial push up, just draw a fib. I know I got a lot of lines on here, but check this out. Let's come back out of here. Get rid of the gold zone for a second. Draw the fib. And then wait for your entry. And look right here. We bounced right off our gold zone and went up again. right? So you can, if you wanted to get out, you could have got back in and rode this guy up again, right? It's another 100, 143 pips, right? These zones are going to be powerful. A lot of times, if you get a ruby zone, they're going to get a gold zone after that on the retracement. Look for that over and over and over again. You'll get a ruby zone, it'll take off, come back correct, it'll give us a gold zone hit and take off. It happened to me yesterday, and I wasn't ready for it because I don't know, I was just kind of chilling. I was on pip, just like, you know, when you eat some good food and you sit back and you just have that posture back in the chair. That's how I was feeling after I collected my pips. But look out for that retracement that'll come back in, and you can take another trade. And then, did that clarify?
It did. Yep. Thank you.
Chuck, can you repeat that last part? What you were saying about look out when you get a gold zone, you're gonna get a ruby zone, and so on and so forth.
Ruby. So if you get a ruby zone that's initially impulsive, but it doesn't take off, start to look back. You're gonna usually get either another ruby. If you get another ruby, it's because the market's still consolidating. But if you start to get things that are landing around your gold zone, then the market is just doing normal stuff. And that's all it really did, is it pushed up and it kind of floated around our gold zone until it took off. Didn't really go back too much further. We had a little bit of fake out right here, but there was nothing to that. There was divergence in that fake out. You can see it right here. Right, market made a low and a lower low, and right here in our MACD, it made a low, and it's starting to not. It didn't do the same thing. If this was real, then this would have pushed down further, but it didn't. It kind of went up just a little bit, and this was pushing down. So this was just a fake out, and then it pushed on up. So my point is that you want to pay attention to what's happening with the structure. This whole zone right here, if I zoom in right here, you guys know this. Engulfing candles produce what? Supply zones or demand zones. So all this thing did was come right back into our demand zone due to that engulfing candle, right? So it hit it once, hit it again with divergence. Nothing really here to see. Didn't really close out of the zone, and it pushed on up. It pushed on up. What's going to happen over time is you're going to start noticing how our indicators are really working and being able to use that with the market structure. This MACD zero line break is very, very key. Okay, very, very key. So that first time it really didn't do anything but retest the area that it broke. Then this next time it pushed down a little bit further, but it just challenged that demand zone. That's it. It had to come back one more time before it paid its respects, and then that was it. It was gone. Okay. But remember, our entry had us in this trade from the jump. And if, let's say you started all the way over, that's fine. You took your money, you didn't deal with this chaos. You might have caught it once, caught it twice, but then you didn't get anything off of this. Now you're sitting back and waiting. And now, what are we gonna do anyways? We're gonna just start over. So come back over here, or replay this thing right around here. What are we looking for? That zero line break. You guys see it? The zero line break right there. I know it's getting crazy in here with all these lines. That zero line break happened right here. What are we now looking for? We're looking for our 1 minute. looking for our 1 minute 420 to be above, our vortex to be above, perfect. And then what are we looking for? We're looking for that moving average cross on the MACD and for our vortex to be crossing. There we go. Stop loss needs to go below the 420 and the structure. So stop loss down here. And now we can get in this play. And then now you can move on with your life about this, right? So just go on and take that trade. You had another entry, okay? It's challenging this demand zone, which makes sense, but eventually, look at our MACD. Our MACD didn't cross. Eventually, it broke through and went on up. Okay, so utilize this to get in trades, to catch continuations. Like, you can avoid all this consolidation if this isn't how you trade, right? The point is don't let up, right? If you stay engaged, then you have the time. If you have the time, then you can ride these waves up and down, or you can ride these waves, you know, you can get all of it, right? We got this money, let it retrace, then we got that money. Think about this. This move only went, well, not only, this move went far, but let's look at what it did. Yeah, me too, Delisha. Because I tell you, I get full. I sit back in that chair like, man, that was good right there. And I'm gonna go over something in a second. Actually, let me do that first.
Chuck, when you get a chance, can you just show the aggressive language that you wrote, that you typed in? I'll just take a picture of it from the screen. I was writing the conservative as you were discussing aggressive.
Mm-hmm.
In fact, Chuck, can you just put both rules up next to each other, and then everybody can take a screenshot?
Yeah.
Thanks, Troy.
There you go. You guys want me to break this up? I can. Everybody got it? All right. So my point is what we were just sharing. Some of these moves depend upon how you trade, right? But this is the advantage of our system. We can, if the market's not really ready to break out, we can catch. So this thing went, I just want you guys to see, look how crazy our entry was. That's just crazy. However, just in this zone that didn't go anywhere but like 150 pips, right? The way that we take trades, we could have caught that, it's 150. Could have caught that again, right? For 140. So you're almost at 300 pips, right? And then we could have caught this, and you see where it went. I mean, we'll just say 170 again before a major pullback. Like, this whole entire play, if you were just holding it, went 140 pips. But because of the way that we trade, we opened ourselves up to 300, almost 500 pips available to us off of something that only went 143 or 150 pips. that's what can happen if we stay engaged and just keep waiting for our opportunities off of our levels. Okay. I didn't even talk about the counter trend because I don't want us to get too crazy. But I know my sister Delisha, she'll rock this thing back and forth, right? She'll go back and forth. But the point is, man, I hope you guys realize why we're waking up early in the morning to train this and talk about this, and we spend this time on it. This gets us into some crazy trades, right? And you can utilize your structure to find your destinations for where you're trying to take the trade. Totally can. Just look left, look right, but we're getting in at these entries at great places. Any more comments or questions before I talk about something else real quick? How are you guys feeling? Let me take a water break. How are you guys feeling?
I feel good, Chuck. This was very clear. I'm going to backtest this over the weekend, specifically the aggressive and the opportunities to maybe hold these trades with confirmation that it's a continuation. I think the potential of that is immense, especially with the kind of pips we're able to get in this particular market. Is really amazing. So very clear. The more we do it with repetition, as you would always say, rinse and repeat. So I'm looking forward to get to that point. I'm not as smooth in the mechanics as I will be, but definitely inspired to know what is waiting for me on the other side of executing these trades in the way that you described this morning, especially with the aggressive. So I'm excited. It's a good time to be mastering this particular technique in the markets. So I encourage everybody to back test it, trade it, and be as consistent as possible, and take full advantage of this particular season of potential in the markets. So thanks, man, for coming up with this, doing your due diligence, leading by example, and being able to demonstrate what's possible to give us all the encouragement and the belief that we can duplicate the success between all of us. So thanks, Chuck. Appreciate you, bro.
Talk back to me. Thank you, Troy. How you guys feeling? Feeling like you can do it? Feeling where are you guys at?
I feel like I can do it, man. I'm ready to work all hours. Well, maybe not even all hours, right? Because after I get a few pips, I can retire for the day. But it's worth the sacrifice. You know, it's gonna have a payoff.
Mm-hmm. Anybody else?
Feeling much better, Chuck. Always feeling better after a training, but you know, again, just continuing to show up. Like, you know, things become like clearer and clearer. Although, you know, for me speaking, you know, when I go in and I'm looking at the system and I'm following every step, but it just seems like, you know, things become clear and like small little things. You know, like, yeah, I'm feeling really good.
Very cool.
And definitely leaving fear behind with, you know, using the different things, you know, with me, every time we're introduced to something new, it's a little intimidating. But again, the repetition and continuing to show up. So that's, yeah.
There you go. Now, anyone else have anything else they want to say before
Yeah, I just want to add, Chuck, when you taught last weekend about using the MACD to draw my fib levels, I had never heard that before. And that has been a game changer because I was actually drawing fibs on the smaller impulses. But when I started doing the fibs using the MACD from the lowest red to the highest green, man, that the ruby zone and the gold zone was just spot on, and it's magical. That's all I can say. It's magical. So I don't know how you guys are drawing up your fibs, but it's a game changer.
Yep. Yep, it is. It definitely is. I'm a just to highlight what she's saying, and you can do this on especially the higher time frames, right? Give me 1 second. Actually, Delisha, can you share your screen and just show that real quick if you're able to? Are you able to?
Yeah, hold on for just a second. You want me to give you a clear screen because I got a lot of junk on mine.
Yeah, just give me a clear chart.
Okay.
I'll be right back.
I'm not sure what. Okay, can you guys see my screen? What screen do you see? I don't see anything.
Not yet.
No, not yet.
Yeah, right now it looks like the Brady Bunch. Like it just has all the squares with our faces or names.
Okay, I'm sorry. I need to figure out what I'm. Okay, share, and then wait. Which screen is this one? Do you see it? Okay, you're seeing my third screen. Okay. So he wants me to give you a clean chart.
It's still not showing up. It might take a second for it to pop up on ours, but we still don't see it.
Okay, hold on just a second. I think I need to hit a button. Excuse me. Let me go hit share. Now, what do you see?
Your chart with all that junk on it. Well, no, not really. Well, I mean, we still see the VI, the MACD, the fast.
You see my old setups. Okay, hold on.
Yeah.
Pretty.
All right. No.
Okay,
we still see your golden ruby zone. I mean, this is still okay.
Let me go.
Can you still show us from that?
No, I'll give you G.
All right, cool.
Yeah, just pull up like a pair that you haven't marked up.
Okay, this one's one. All right, so GCAD.
And actually show them how you could use it with the higher time frames.
Okay. Oh, this is the pair I've had marked up for a while. I'm sorry. Let's go to 1 hour.
Also, if you pick a different broker, so maybe you had FXCM marked up, but you may not have Forex.com marked up.
Okay, let me see. Let me see if I have this one.
There you go.
Okay. All right, so I'm on a 1 hour time frame. Actually, this one's not finished. Let me just move back. So let's do this one here. If I was doing the Fibonacci, I need to make that just a little bit bigger so I can see, right? So I basically run my fibs from here, and then I'm going to run it to here. And then I would accommodate for the wicks. Let's see here. Here. And then I need to bring it over then. Hold on. Because you see how that continued to play out.
Yeah, I went right down there to that ruby zone.
Yeah, this would have been my.
Delisha, take that up to the highest point in the green zone, because that's what you want to look for, the highest point. Not the histogram, but the actual price action.
Yes.
To the right a little bit.
Price action, the candle, that higher high.
Hey, but Charles, you see how that's a little deceiving though, right? Because it doesn't correspond perfectly with the price action.
100%. So you're using the color, not the histogram. You want to use so this is a good clarifying point.
Okay.
You want to use the color, the highest point in the color. Don't worry about the peaks in the histogram, and don't worry about the peaks in either direction.
You want to use the color, the highest point in that color before it goes back down. And
You're
goes.
saying right here because it's brighter. Or is that why you're saying that? Because it's brighter, Chuck?
No, the highest point of price action. Not the. So I identify where the green area is, the whole green area. Don't even think of it as. Don't even worry about how high the histogram goes.
Okay.
Worry about whether it's green or a red area. And then look for the highest point in price action in that green area.
Gotcha. I got you, Chuck.
I got you. So, okay. Like if I would have came on this chart though, like in the morning, I don't know what time this would have been. But I would have actually gone here. Let's say I woke up and I'm ready to chart. I would have gone here and drawn that fib, and I just would have waited. But you're right, because by the time I would have waited, because I wouldn't have even done anything till it got into this ruby zone, I would have moved this up. Okay, I see. I understand.
I'm right there with you. That helped clarify it for me as well.
Right. So we can make the adjustment.
But you can re-enter off of the gold even if it doesn't get into the ruby though, right, Charles?
Correct, but that didn't go to the gold. That went to the 38.2.
I wouldn't have done anything with this trade at all, because it would have never made, even down here, it would have never made it to the gold zone. I wouldn't have done. I just would have been sitting here waiting.
Yep. And now notice what happened.
Yeah, I see. Because this here would have been structure down here. It would have never hit the stop loss.
So do an example on our 15-minute time frame.
Tabisi, do you normally trade the higher time frames?
What I do is I mark up my charts on the weekends. I find weekly resistance and supply, and then I go to daily, and then I do an intraday. But then I actually trade ORS using the actual strategy with the 1 minute, the 5 minute, 15.
Got it. So just so you have to know your zones, your areas.
Yeah, I just pre-draw up to know my zones. That's it.
Got it.
Okay. Can I do it? Chuck, do you mind if I do it that way? Right quick.
Definitely. Go ahead.
I just do things the way I do them. It just helps me. All right.
That's cool.
I don't know. That's not what I was trying to do. All right, so this is how I just get started so I can know where some key levels and key zones are before I even start going on the charts in the mornings. And I usually do this over the weekend, and most of the time it works out for me.
You keep these levels up for the week.
Yep, I keep them up for the week unless there's a major move. Or if I get a harmonic or something like that, I might put a harmonic with a pitchfork on it, and that also helps me to see some zones. That's why GA is crazy. It looks like a Christmas tree. It's got a lot going on. And whenever I want to, I don't really move anything. I don't delete things off my chart. What I do is, you see this button right here? You can actually click that button down there and you can hide things. See how I'm hiding stuff? Like there's an MTF band that's already in this here. So I can keep historical things. Chance and Samantha showed us that a while back, how you don't have to delete your harmonics and pitchforks and stuff. You could just hide things.
What's the difference between hiding it there and hiding it up above where the actual, or that's just where you can just do it?
No, this allows you to hide like your lines and all these. These are just indicators.
Oh, got you.
Right? But down here is all my drawings. Anything that I draw would be in here. And it can keep. So this is
everything is there. Every single thing.
Everything.
And how do you keep it on, like when you turn off your computer?
I don't actually turn off my computer.
I have the same issue. That's why I asked you. But
yeah, I don't turn off my computer, but
I would like to. It needs to be turned off.
Yeah. If it's a situation where I really want to get some sleep, because this is in my bedroom. That way, when alerts go off, I can hear them. But if it's a night that I decide I need to get some sleep and I don't want anything dinging off, this is the actual TV that you guys are looking at, and I will turn the TV off. That way I can hear it. Yeah.
Got it.
Everything though should be being saved. As long as you have that cloud right there at the top where it says optimum reversal next to publish.
Yeah.
As long as that auto save is on, then it should save your stuff.
Yeah.
What happens though, if you change chart layouts, that's what some people do, is they change chart layouts. And chart layouts will have different things on those charts. So I don't really change my chart layout. I'm pretty much always on the same chart. So my drawings stay there. As you guys have seen in the past, I've showed you my US 30 drawings. They've been there for months. So they're usually gonna be there until you erase them. I had Bitcoin stuff drawn up for like a year that sat there.
So there's just different ones that you store of chart drawings there.
Well, I don't change any chart drawings. I either erase them or it'll stay just like how Delisha has hers.
Okay.
Or I'll hide them just like she showed you.
Got it.
But and then sometimes what I'll do is I will go through the different brokers and I'll draw something different. So maybe I'm trading off my Oanda and that has some markups, but maybe when I'm trying to look at things a little bit cleaner because Oanda's too busy, I'll go to forex.com or FXCM on the same pair.
So it doesn't replace it.
To just have something cleaner, to draw it on and
Gotcha.
look at it differently.
Thanks, that makes sense. That's helpful.
So Delisha, I'm gonna move you along just a little bit. So after you kind of have these lines drawn, how would you then apply that MACD and that fib to then look for those entries?
Okay. So this one's a good one. Wait. Hold on. Wait a minute. I need to find divergence. Let me find one. Let me take this off. All right, like, so you see how this is going up, but then this is going down? That would be like divergence right here for me. So then I would draw a fib from left to right.
And notice how that high to low is representative of the MACD. You see how she did that? You look down, the highest point in the green to the lowest point in the red. And remember, it's the price action highest point and the price action lowest point, but in the green and red areas.
Want me to do another one?
Nope. So you, in that case, because of how you drew it, you would be looking for a sell off of your ruby or gold, correct?
I would have been looking for a sell off of that one. Mm-hmm.
So no, you're good. Go to the 30-minute for me, please. Okay, take that, go back over just a little bit to that other low to the left.
This one here?
Yeah, so you guys see how the lowest point in that red and go to the highest point in the green. Right, just like that. And there you have that hit off of the ruby. And that's where we would be looking for our ORS entries. And notice how it's also at her daily support level too. Right? So everything's corresponding together. Right? And look how when it went up, it ran into her intraday level.
Mm-hmm.
And then it went up to the other intraday level. Okay.
Yeah. So for me, Chuck, that's why I like to draw these, because I like to know where I'm at to make a decision as to what am I really looking to get into. Am I looking for a buy or am I looking for a sell? Where are my levels at? That's why I like to do, this is what I call extra homework that I like to do to prepare myself for the week.
Delicia, those intraday levels, I didn't notice. Was that a 4 hour or 1 hour?
4 hour. I could have just written 4 hour. Yeah, they're 4 hour levels. Mm-hmm. Yeah.
Yeah.
Delicia, where that fib is at, right? Someone asked a question about the divergence. Those two highs, right?
Let me draw a trend line. You can see it right here.
Well, the divergence would be comparing the lows to the lows and the highs to the highs. So the divergence wouldn't be on top.
Oh, you talking about this right here?
Correct. There you go. So take that top trend line off, please.
Gotcha.
So you guys want to pay attention to what's happening with the lows. The lows there's divergence in those lows. And what's happening is the MACD, you can see the fall off, right? It should be corresponding. If those lows are even, then the MACD would be even, or they would be the MACD would keep on dropping further down. But the fact that that red area is getting smaller and smaller and smaller, that's letting you know that we're losing momentum. The market is getting exhausted. If you can go to those highs, where you drew the fib at, the last two highs, yep, right there.
Here.
Exactly. Connect those two highs. Go back to the high right there that the fib is at in that guy.
Gotcha.
And then look at the mountains on the, you guys see how it went up higher, but it didn't, the price action went up higher, but the MACD was falling off. And that's why you had that drastic move down on her to her Ruby zone.
Gotcha.
Okay. So those are the things we want to pay attention to. Lastly, delete that fib for me, please.
Mm-hmm.
And then go back to the left where that first impulsive move happened. Go right up there to the left further, the bearish impulsive move where the 420 crossed that.
Right over here.
Look
Okay.
at the highest point in that green area. Highest point in that green area to the lowest point in the red area before it broke up to be a zero line. So draw a fib there. Highest point. Yep. To the lowest point in that red area before it did the zero line break. Yep. And if you extend it over, you will see that that drop that we had, that we just pointed out with that divergence, came off of the Ruby of that. Keep going so it can go through it. Yep, right there. Perfect. You guys see that? So where we just pointed out that divergence with those two highs, right? Those two higher highs, but our MACD is doing something else. There was our divergence in that area. And it pushed down. All it did was go to the other Ruby zone. This is what I told you guys before. When we're in consolidation, a lot of times you'll just see it go from Ruby to Ruby. Okay, it'll go from Ruby to Ruby. Cool. Thank you, Delisha.
You're welcome. Great teaching lesson. I just picked up some more things that I was doing incorrectly, Chuck.
No, that's good. A lot of people have the same. I've actually corrected that with a few people. So it's something that I need to make sure that I'm teaching better. So
right. I mean, I'm all smiles right now. This was a great hands-on lesson.
That was great, Delisha. Thanks for sharing. That was awesome.
Yes, thanks, Delisa. I'm coming on late, but that was great for me to add to my notes.
You're welcome.
Can't wait for the recording, Chuck.
I got your back.
You always do.
You guys, I'm telling you, I'm gonna highlight nuances. I'm gonna point out different things like that. I'm gonna go and re-emphasize and do all those things. We'll move forward on these trainings, but we don't need any more new bags, right? Like there's nothing else that we really need to be profitable in this market. There are other things that we can learn. I mean, we can learn so much, right? So much. But I'm telling you, this right here is the core. This right here is the core. And these fib levels, there's a reason why they're so responsive, right? There's a reason. I learned fibs probably early on in my trading, but I never took them serious until more recently, right? And it's amazing. So that's that. What I wanted to do is I want to talk about this because I just mentioned, okay, someone wanted to know about the orange levels. All right. So if we're naked trading, good question. I'll address that again. Here we have an impulsive move down. Okay. What are we going to do? We're going to draw our fib levels. Okay. And then we're looking for the market to come to our gold zone, or come up to our ruby zone, and we're looking for a sell off of those zones. Okay, that's what's happening. Now, if I take a trade off of my gold zone for the sell, okay, my stop loss is going to be the 83.5, okay? My stop loss off of the gold zone is going to be the 83.5. That's what this orange level is in our fib, okay? That's what that is. So if I take a sell down for this trade and I'm not using ORS, so this is just a naked trading. This is just more details. Like if you're kind of casually trading, let's say you caught like I don't know, a Ruby zone off of a daily level and you didn't really get exactly an optimum reversal entry because it's such a big area. You kind of more so just took it off of market structure, right? You're going to want to put your stop loss above the 83.5. Okay, above the 83.5. When we take a trade above or below the 83.5, this one would be above because we're selling down. It would be the opposite if we're buying. When we take a trade off our Ruby, okay, when we take a trade off our Ruby zone for the sell, our stop loss goes above the 100%. That's all that we're doing right there. Now, again, this is more of a naked trading type of principle. ORS, we're not really dealing with super wild stop losses. However, again, if you were doing like maybe a 4-hour trade in after a 4-hour candle and you wanted to just do it, you could quickly just, let me go over here and show you guys. All right, so let's say I was gonna take this play right here, right? Come right here, got this gold zone hit right here. Right, taking my trade off of this gold zone. Right, I'm gonna take this trade. If I just if I see, let's see, break a structure or something to get me in this trade, right? Something like this off my level, broke my structure, my stop loss, right? If I'm taking a trade, I can just go ahead and even if I took it from here, this guy right here, right, off of that break, my stop loss just needs to go up here. That's all we're saying, right? That's just more so like naked trading. You'll put your stop loss right up there. Now, if I was to take a trade off of a Ruby zone hit, so let's get this off and this off. Okay. If I was to take a trade off of a Ruby zone hit, like this guy, my stop loss would go down here. Fred said that seems like a lot for a stop loss. Well, not with the risk to reward, no. But yes, it is generally a lot more than what we have to do because we have ORS. But this is just basic. So coming out of this zone, the 1,000 pip move, stop loss was about 140 pips. Okay, that's how that would work. So that's kind of what you want to think about when if you're kind of, let's say you didn't have a chance to really check too many things out and you're kind of just, like I said, these higher time frames, entering off of price action candles, use this as your guide, okay? Again, we have ORS, so we really don't have a reason to be so casual. We didn't come here to be casual. We came here to be precise. But this would be what you could do. Okay, in other words, also, let's say it broke down a little bit further. And you're like, well, technically, Chuck told me my stop loss is here. If I see that thing break down, like I took this trade, but my stop loss is down here, right? If it's still kind of staying within the region, then this is probably just still staying in our zone. And I catch a new entry and I don't have to worry about it. Okay, it is a general rule of thumb. iPhone, are you new? Just checking in. I'm saying hello. I'm Chuck. Are you brand new? You had just asked about what's ORS. Ephraim. All right, cool. Ephraim is our ORS strategy. It's optimal reversal. It's what we've been training on all day. So you missed the initial explanation of it, but the recording will have it, brother. Cool. Good to see you, man. All right. So I want to bring this across real quick. Fred, I'm checking in with you. Do you still want to teach right now?
I mean, in the interest of time, I don't have to. I can always wait another session, so I don't belabor it. I mean, how you gonna ask me to preach after you preach, man? You're a tough act to follow, man.
Yeah, nah. I just because we went a little bit further past when I would have put you up, so I'm just trying to check in. If you're willing to wait till the next session, I'll
absolutely.
keep you.
Yeah, absolutely.
Okay. Plus, you're gonna be able to have. It looks like I moved you forward in your understanding today, anyway.
Yep. Yep.
Cool. What I want to do, I just told you guys something about how we can take some of these trades, right, off of these zones, but then at the same time, I mentioned to you guys that we essentially have opportunities to play this thing again, right? To get in some of these trades again. I'm gonna go ahead and just delete, not delete everything. Let's delete the most recent stuff.
Chuck, are you asking us to unmute our phone?
No, I was actually trying to mute some people out.
Oh, okay.
Now, what I want to talk about, because we have something, and I just showed you guys. Let me see. Do I have my GA up from earlier? Let me see this. I think I have it right here. Yep. Let me show you guys this, because I just want to show you guys how crazy it is what we're doing right here. All right, this is a 15-minute harmonic. All right, don't worry about drawing the harmonic. You don't necessarily need to know that it's a harmonic. I just pay attention to harmonics. But check this out. Let's come over here. Remember what I talked about? The lowest point in the red, the highest point in the green. That's that C to D leg on this harmonic. You guys got that? That's all we needed to really know at the moment. All right. MACD, lowest point in the red, highest point in the green. And again, I'm not pointing to the histogram. I'm really saying the whole green area, what's the highest candle, right? The whole red area, what's the lowest candle? The high to the low. Okay, hopefully that clarifies everything. Let me go ahead and clear some of this mess out. All right, first off, I have this impulsive move. What can I do? I can draw a fib, right, from the high to the low. That is what this ruby zone is, okay? That's all I want you guys to know. That's where that ruby zone came from. I'm gonna go ahead and get this guy off of, okay? Now, here's what happened. On another time frame, where I was at over here, I watched essentially we went from this bearish move down, right? This bearish move down, We had highest point in the green area at the time, lowest point in the red. Look at this right here. Look at this right here. Do you see how this is a gold zone? Do you see how this is a ruby zone? Okay. So ruby zone right here from this impulsive move, gold zone right here. Okay, I'm just identifying these zones, but I just want to show you something really quick. I'll go one more time frame down because I want to show you this. Lowest point in my red, highest point in my green. Do you see that this is our gold zone? Okay. So all I've done right here is I've kind of put trap price. I got a ruby zone of the bigger area. I have this impulsive move right here, and I have a gold zone right here. Here's what I'm trying to say, okay? This trade right here, right, ended up being a trade that qualified for our ORS strategy. I'm not gonna go through all the steps, but trust me on it. Here's a zero line break. We had a 5-minute vortex, everything happened, stop loss here. This move right here, if we played this out, right, if we played this out all the way to the top, produced 95 pips, okay? When this came up into our ruby zone of this impulsive move, this was also a trade that we could have taken, okay? This is actually a trade that I did take. It's the only trade that I took. Well, actually, I took this one off the gold, and then it pulled up, and then I took this one, okay? So we hit our ruby zone, right? We had our divergence. You can see it right here. Here's a low to a lower low, high, sorry, a high to a lower high, high to a higher high, ruby zone. And then it pushed down, all right? You guys see that? Now, we had this trade. I'm just gonna add this trade, 112 pips, all right? We had this trade, 132 pips, okay? Then what did we do? We didn't take this trade up, right? Maybe we could have qualified it, maybe we didn't. But what did we do? We draw another impulsive move. Look at the green, highest point in the green, lowest point in the red, draw a fib off of that. And what do we have? We have a gold zone. Our ruby's up here. Look at our gold zone, okay? We can sell off of this gold zone. What else did we have here? I want to zoom you guys in. Let's see if you can see it. You guys know on previous trainings, we focused in on what makes a supply and demand zone. You have these bearish engulfing candles, right? It's the fingerprints on the market. It's the institution's fingerprints on the market. The big money, the money, they left their fingerprints. How did they do it? By an engulfing candle, okay? What you want to do is you want to pay attention to those engulfing candles, and you want to box up the body, all right? What do I mean here? I mean, there's a body on this candle. And what you want to do is you want to box up the body of that candle. Now, I drew this a little bit lower because I wanted to include this guy as well, okay? This body right here and this body, because I know this whole zone is still reactive. And as we know, the market pushed down aggressively off of it. And what did it do? It came and retested that area, and look how it closed. All the candles closed in our gold zone. That was another trade that we could have taken down. So you're talking about once we got out of the gold zone, this thing went down another 160 pips. So again, 112 up, like 150 or so down. We didn't take the buy. This sell was 163, okay? All of that to say, then it goes into our ruby zone for the buy. And we just talk about coming out of the ruby zone, it was 142 pips. So in this craziness right here. There was 500 or so pips that we were able to take off of our zones, okay, waiting for our entries. I only caught this one, okay, I caught about 216, 17, 18 pips, somewhere around there. Between taking this, I got this on 2 positions. Now, I want to show you guys, because there are a lot of trades. So how do we do this? Because we're in the land of abundance, right? We're not gonna have FOMO, but we also need to, yeah, only. We also need to have a plan, okay? So we have the plan of what we're gonna do with our strategy, but also we need to attack the day with the plan. Delisha just mentioned that she has her intraday levels, her weekly zones. She kind of knows where those main areas that she's looking for, and then she's gonna look for our opportunities in those areas. Okay, that's good. But now we need to think about, okay, what are we gonna do with our money? Okay, how are we gonna attack this? And so what I wanna do for this next bit, because I don't want you guys to get overwhelmed with all the opportunities. Okay, many of us are doing we're on what we call this 90 trade or 135 trade plan. Do I have it on here? I think I do. Yep, let me show you guys this. Many of us are on this plan. Okay, many of us are on this plan. And hopefully, like, you know, you guys are seeing that stuff like this can be accomplished if we lock in, we focus, and we control our emotions and our mental space, okay? All right, we're gonna have to lock some things down. Lock down greed, lock down fear, inconsistency, right? We can do this. Now, here's the thing. Right here, many of us are starting with the $200 account. I'm not giving financial advice on how much to invest. I'm just giving you a hypothetical situation here based upon just numbers and math. Many of us, right, have done $200, right? The way this thing works is we're taking $200 and we're treating this as if we're trading 15 bucks, okay? 15 bucks. And all that we're trying to do, this is initially based off of 10 pips. I'm telling you now, if you're trading the pound pairs, this 10 pips does not work for us right now. It is too aggressive because our stop losses are not going to be 10 pips. At minimum, when we're trading, we don't want to have less than 1-to-1, even if you have a good strategy. Don't want to have less than 1-to-1 risk to reward. We would prefer to have more, but we at least 1-to-1. Most of our trades that I've been seeing, most of my trades have been 1-to-2, 1-to-3, 1-to-4 risk to reward. Okay, so we don't want to have less than 1-to-1. So let me bring. Well, I'll come back over. There was a trade that I took. I'm not gonna go over the chart. I had a 30 pip stop loss. If I had a 30 pip stop loss, then I need to adjust this trading plan to what my stop loss is going to be. And now I'm using a 0.01 and I need to go get 30 pips. You guys know that's going to be about $3, right? But I need to go get 30 pips at minimum, 30 plus, okay? That would help me complete trade number 1, right? The next trade, I take that, right? I need to go get at least 30 pips. Remember what we just talked about. I showed you one that went 150, 112, 140, right? There's 30 pips there. It's my point. We can complete these trades, but we have to have focus and we got to lock in, okay? So just 1 trade, 2 trades, right? Just going down the list, right? Until it tells you to change your lot size. Okay, until it tells you to change your lot size. Now, notice here that after a while, right, this we need to go get a bigger profit amount. But again, if we're going to get 40 or 45 pips, we're going to be fine. Now, as this adjusts later on, we'll be fine. Now, the idea though is that we need to get to trade 45, okay? So that the account is somewhere around $1,100, all right? Once it's there, around that $1,000 to $1,100 mark, that's when we would go back to trade number 1, okay? And we're gonna change this. We're gonna trade that $1,000 at $1,100 like it's 200 bucks. And then from here, we would use the lot sizes that are on the chart. And from there, it takes 90 trades, obviously successful, to get there, all right? Now we're gonna lose some trades, all right? We're not gonna win every trade. But what happens is you wanna make sure that if you lose a trade, that you repeat the trade, okay? So let's say we lost this trade. Well, you will repeat this trade again with the same lot size to make up for what you lost. And then you would need to repeat it again successfully to get on to trade number 2, okay? So if you lose the trade, then you need to retake the trade and you need to trade it successfully and then trade it one more time before you can actually move on, all right? So this is what we're doing. This is a plan. Some of us are doing it like this. There's nothing wrong. You don't have to do it like this, but there's some of us that are. Now, let's go back over the chart because I want us to see this. Whatever we're doing, we have to have a focus. So let's attack it with our focus, being focused, and go from there. Thank you, Delisha. I didn't even have to do that. I was about to grab it. Appreciate you. So here's what some of us have done in the past, right? MFB Entertainment, that's the name of my company. But this was my MFB FX trading plan. So I have that pre-programmed to finish my sentence. All right, this was my trading plan, Chuck's, okay? Now, here's what I did. At the beginning of my day, okay? At the beginning of my day, I need to essentially determine this, what's happening. It's my daily routine, right? It's my daily routine. And the question that I'm asking myself is what kind of account size or balance am I going to start off with, okay? What kind of account balance do I have at the beginning of the day, okay? By 300, 200, 100, 500, 10,000, whatever that is, I need to say, what is my initial balance? And then from there, I need to determine what my goal is, all right? What my goal is, and then my percentage risk for that. So the next question is, how much am I willing to risk for the trading day? Because we're gonna have to have a cutoff. I'm telling you this already. You're gonna see so many trades, and it may produce in you like, I gotta get, I can't leave the money on the table, so many pips. I gotta have a limit, right? You know how the bars, they cut people off when they're drinking too much. You need to have a limit to control yourself. I've chosen 6% for mine. Some people can only handle losing 4% of their money in a day. Some people may not be able to lose more than 2% of their money in a day. Whatever that is, some people, I would not advise to go too much higher over 6, especially if you've not been a very, very consistently profitable trader for a long time. You want to control that, right? Most people are risking anywhere between 2 to 4 to 6%. So you figure out what that is for you, okay? So what this means is, for me, I'm going to put back 6, if I have $1,000, I'm not losing more than 60. If I have $1,000, I'm not losing more than 60 for the day. Now, the next thing that you need to ask yourself is, what are you going to risk per trade? Okay, what are you going to risk per trade? Some people risk 2%, 1%, some people do 3%, right? That's what you got to figure out. You have to figure that out. Now, I told you guys that I took a trade and I had 2 positions. Here's what happened. Here was my mindset. I initially said I have 6% risk for the day. Okay, I have 6% risk for the day. And then I said, you know what? I'm going to take a trade at 2% risk. Well, what happened is the market moved down a little bit and then pushed back up. And I noticed that it hit a level that it had just broke. And so when I saw it respond to the level the way that it did, I entered in a new trade. Now, what I did is I personally reduced that first trade into half the risk. And the second trade was 2%. So the most that I was going to lose on those 2 entries was 3%. But I had the ability to put that second trade on. However you do it, you'll get good at it, figuring out how to put in another trade. But you got to control the risk. Some people will stack and stack and stack, and they'll end up being beyond their 6%, right? You want to control the risk. Figure that out for yourself, what that's going to be. For me, I do 2% risk, right, per trade in this example. Now, the next thing, so what does that mean? If I lose 3 trades, I'm done, right? 3 in a row before I win one, I got to be done. I got to say, you know, that's enough. I'll come back and trade again, go watch some cartoons, go watch something funny, read your Bible, pray, do whatever you got to do. Hang out with your friends, go walk the dog, talk to your spouse. Do what you got to do to reset, but have a cutoff point. I'm telling you guys, you got to have a cutoff point. The next thing, what are we trying to gain? So now we have to have this target, right? Where are we going for the day? For me, I'm aiming for 10% minimum. Okay, I'm aiming for 10% minimum. So if I'm saying I need to get 10%, then that's the target that I have in mind, right? I'm trading to try to get that. I got time on my hands, I'm quarantined, trying to go get that 10%. Because I know what 10% can do. I know what 5% can do, but I know I can get 10%. I know that's within my skill set. And I'm gonna say this, I'm doing nothing different than you guys with the strategy, everything that I'm teaching. So we can go get these gains. Think about it right here. At 2% risk, I just told you that we had a trade that went 2-3 times our stop loss. That's a 6% gain, 4% gain. So it's just catching 1 or 2 trades that's really getting me to this 10%. Okay? That trade that I took, that I showed you guys earlier, I got 11.8% total between those 2 positions. So it can be done. It's not hard, but you got to have a target. What is your target? 5%, 4%, 3%, 2%, 10%, whatever that is, you got to know what that is. Now, there's something called over trading, okay? And some people will teach, they'll say over trading is when like you're just trying to get too many trades and you're trying to do too much, right? You're either over trading because you're risking more than what you should, right? So you went past it and you should have cut off, or you just keep trying to take trades. You're never satisfied, okay? What I've done is I've figured out a way to control myself from over trading, because many of us, we've done it. We've won a lot and then we just lost it all back. Then we feel bad that we lost our money or whatever it may be. Those emotions are not fun. So the way that I control that emotion is by this right here. I have a rule that once I actually hit my target, I'm going to then what percentage of my profit is the question, am I willing to risk after I have hit my daily goal for the additional opportunities? Because remember, I just said we took that trade, then we had another trade, right? For me, I said, I'm not going to lose more than 20% of my profit, and then, or nothing greater than 2% of my account. So what does that mean? If I'm up at 10%, I'm not going to lose more than 2%, right, of my account. So let me write this down so that we have this, because this could get a little confusing. But I got you guys. Let's say we had $1,000 account. Okay. We have 1,000, and we say I'm trying to make 10%. So today we made $100. We have profit. But then Delisha gets on the call and she's like, look at GA, we about to get another setup. And you're feeling like, dang, I already hit my total. Okay, I'm willing to take this trade. Okay, but I can only lose up to 20% of my profit. So 20% of my profit would be 20 bucks, right? 20 bucks. Also, $1,000, right? 2% of my account size is also 20 bucks. So in this first example, 20 bucks is my limit no matter what. It's 20% of my profit, and it is 2% of my account size. So I can take this next trade, but I'm not gonna let my stop loss cause me to lose more than 20 bucks. That's what I mean. And if I lose that 20, I'm out, okay? That's simple. We're done. Leaving with our 8% gains, that is great. Okay, we don't have to feel terrible, right? We saw another trade that fit our qualifications, we took it, but now we're not feeling deflated because we gave all our money back, all right? For me, that's cool. But now if I win that trade, and now my account, let's say is 1,050 bucks, right? Now I have more money to work with, but I'm going to say now, okay, moving forward, I'm not going to lose more than 20% of my profit. What's my profit right now? 150 bucks, okay? So what would 20% be? 30 bucks. I'm doing this in my head, I think it's 30. If it isn't, someone correct me. All right, $30. So now I can't risk more than $30. So if I lose this trade, the least amount of money that I'm going to leave with is 1,020. You guys see that? I'm controlling how much I'm willing to risk. And it's keeping me being able to take the next trade opportunity, but not jeopardizing all of my money. Okay? So that I leave happy. So worst case scenario, I lose that first trade, I'm down 8%. Okay, I'm up 8%. And that's kind of how I control it, okay? And I just want to share that with you because we're going to see ruby zones and gold zones, like ruby zones and gold zones galore. We're going to see optimal reversal entries, especially aggressive, okay? Aggressive will give us a lot of entries, especially in this market right now where things are flying around. And you're going to see like, man, there's another trade. What I don't want you to do is to give away all of your profit. So this is something I wanted to offer to you guys because this has worked for me, that it allows for me to keep trading. And then once I lose that trade, that's it, I'm done. But if I win the next trade and I see another opportunity, so now I got let's say 1,100 bucks, right? 1,100 bucks. Now I'm not going to risk more than 20% of my profit. So now how much profit do I have now? Sorry, I think I did that all wrong. So, sorry about that. I should have actually, this was 1,150. Had $100 profit. Yeah, there we go. So that should have been 1,150 and I would have made that something. I can't think of Let's go to calculator. Got to get it right for the recording. 1150 times 0.2. Oops, 0.02. 1150 times 0.02. 23 bucks. All right. 23 bucks is the most that I would be risking on that trade. You guys got that? So I'm leaving with at least 1127. Okay. And now I've won another trade. Let's say that counts 1200 now. Same principle. Okay. I can keep playing. If I got time, I'm sitting around, not doing anything, I'm trading and chilling. You know, some people are Netflix and chilling, we're trading and chilling. Okay. But I gotta control that risk and not give away all my hard work. That's what I'm saying. So now I can risk $24 on this trade, right? And I can take the next trade. Does anybody have any questions or comments about this? Is this helpful? How do you guys feel?
This is crazy awesome, helpful for sure, Chuck. And you know, like you said at the beginning of the day, look at what we're at and what we're going to do and what we are not going to do. So no, this is definitely helpful.
Yeah, it's good stuff, Chuck. In fact, it's critically important after the strategy. Risk management, as you know, has been a little bit of an Achilles heel for me, or a lot of it, I should say. But the clear, precise rules, of course, you have to adhere to them. But the way that you're laying it out as a whole trading plan, especially with all the opportunities with this strategy, just really defaults to your discipline to be able to be consistent with not just the trading, but in particular this risk management. That's been a challenge for me. I'd have to admit, something I have to work on, but you've made it very clear now, and especially in light of knowing that it'll get you to your goal quicker if you don't violate it. So having this up in front of you is going to be good for me. So this was great. I'm glad you added it this morning.
Anybody else?
Excuse me. Another huge thing, Chuck. I looked at the chat and I don't see the one young lady that was with us last Saturday. You probably will remember her name, but one of the things that she said is that she had seen the plan before, but had never heard it be explained and broken down the way you, always do, explain and break things down so that we're not just mismanaging, but if we don't have a clear understanding on exactly how to work the plan, then it doesn't matter that we have this plan if we still don't know how to work it or how it's supposed to go.
Absolutely. Absolutely. Yep. Managing those emotions is gonna be key in having a plan. And just, I'm telling you, everything, we got our plan. We got our trading strategy, right? We know what we're doing. You should have your confirmation checklist right there, so you know exactly what you're doing. Making sure that all the rules are being met, right? If we're gonna do aggressive, make sure you got that Fibonacci, that divergence, that, just going down the list. And then 1 minute MACD break, 0 line break, 5 minute vortex, 5 minute MACD, stop loss in the right place, right? Check. Lot size is appropriate to my stop loss. Not gonna risk more than what I said I was gonna risk for the day, okay? Really, really, really hold yourself accountable, right? And if you wanna have trading partners and you let them know, hey, today this is what I'm doing, that's what I'm trying to do. And I'm telling you, trading together, Adeze said this to me one day. She said, I don't think trading was designed to be something you did alone, in her opinion. She felt like you needed a tribe, you needed a community of people. Now, some people are cool with doing it alone, but what that tribe looks like, right? Maybe you're not sitting there trading next to somebody, but maybe you're having someone hold you accountable. right? Because that's what's needed. You need somebody other than yourself sometimes, right? So for me, my accountability partner is my wife, right? It's not fun to come and tell her that I didn't do what I said I was gonna do. It's not fun. Now she's very encouraging. She has my back, but I'm just telling you, it's only so many times I want to have that conversation with her, and that's what happened this week. I had to be like, okay, babe, so this is what happened. I reported out, and then it's like, but this is what I'm gonna do. I'm gonna do this. So it felt very great to finish this week. I was saying, babe, I told you I was gonna do this, and this is what I did, and look, 223%. That right there, and the fact that wasn't even like I didn't sweat for that. And I'm not saying that we're all gonna get 200% or that I can consistently do that. What I am saying to you guys is I promise you that our setup is there multiple times in the day on multiple pairs. Our setup is there. And we show up, keep our head level. Don't be too greedy. Trust the process, right? Trust the process. Statistically, this is in our favor. Okay? So we got this. There's nothing else, right? Nothing else. Block out all the noise, right? Control. What I do want you guys to think about right now, though, is please think about how fast these candles are moving, okay? What beat me up that week was that I wasn't considering the spreads that had increased and the volatility of these candles. On GA, we were seeing 40 and 50 pip 1 minute candles. 40 and 50 pip 1 minute candles. So you want to be careful when you are trading that you are considering all things. Look at this guy right here. I'll just measure this guy. It's a 32 pip 1 minute candle. Okay, that's quick. And you guys know I was in a trade. I was in this guy right here. These candles were taking off. This one wick right here, I remember this because I was considering trying to take this trade and I was going to get out on this candle, and then wicked up. Do you guys know it erased 50 to 60 pips of my trade in just that little bit of time, right? Now I let it push down one more time and I closed it somewhere around here. I was trying to get down here, but it didn't make it. The point is these candles are quick. So don't feel like, oh, I could be lazy. Let me just use this 10 pip stop loss, 15, 5, right? Don't do that. Wherever that is, don't worry about it. If you're like 60 pips, dang, that's a lot, right? Don't worry about it. Get out of your head the normal stop loss range that you're used to. Just say, whatever structure dictates, that's going to be my stop. Okay, so if my stop is 60 pips, that's fine. Look what it produced, 129 pips. The market is moving differently right now. So you got to think, like I caught 1,000 pips, over 1,000 pips, well over 1,000 pips this week. But the thing is that I have to interpret it in the right frame of mind. Okay, market is flying. So don't get lazy with your stop losses, and also don't get greedy with that trade plan. Okay, I know it's tempting to keep it at 10 pips, but don't do it. Because you're like, dang, 10 pips on that perfect entries you're gonna see. It's like, man, Chuck, I didn't have any drawdown. I could have just went in the trade and just don't do it. Consider the structure. Okay, these candles are too big. Lastly, Underground Railroad. The Underground Railroad is leaving the station. It's been leaving the station and making moves. Okay. Our Underground Railroad is always going to be based off of, I'm going to deal with these candles. Let's see. These this work? Yeah, we'll do this guy. Underground Railroad is based off of the first part of the day. All right, so what we're looking at, you want to identify where that Sydney open candle is. Okay, it's right here for me. It's my 1400, which represents 2 p.m. in the market. Okay, wait, no, right now it'd be 5 p.m. So let's go back. Let me pull up my session. No, it's 2 p.m. All right, I was correct. 2 p.m. All right, so you want to start with the session thing. You see what I just did? I right-clicked on the screen and I turned on to parent session break, so you can automatically throw that on. Okay, so you're starting here, and what you're gonna do, oh, I'm tripping, you guys. So yeah, 2 p.m. is 5 p.m. Eastern. I was confusing myself. I'm going the wrong direction. So what you want to do is it's the 5 p.m. Eastern candle, right? Our 2 p.m. in California. You want to identify the highest point in the first 8 hours and the lowest point, okay? The highest point and the lowest point. So what we usually will do is we will box up the first 8 hours of the day. Okay, so we're gonna box that up. And what the market is doing is it's creating an initial high and initial low. Initial high, initial low of the day has been established, okay? And usually the market is gonna do something. It's going to break out and go and break the high or break the low, okay? Now, here's what we have here. You want to pay attention to this last candle. The last candle before the 1 a.m. candle, before 1 a.m. Eastern, 10 p.m. And you want to go to the last low and you want to draw a trend line. You want to try to hit it. If you can't hit it because there's candles in the way, you can't hit it because, see you later, Odette. If you can't get it because there's candles in the way, then don't cut candles. Deal with the wicks that are in place, okay? So all we're doing is doing that. What we call this first area, this is just the A range, okay? Call this the A range. Now, I like to draw a red trend line for my sell and a green trend line for my buy. And here's simply what we're doing, okay? We are looking to take trades, right? When the market closes below our zone or above our zone, okay? Very simple. If it closes underneath our trend line, right? Then what we want to do is take a sell down, okay? Our stop loss needs to go above the high, and then we're going to take this trade down. So this Underground Railroad trade went 50 pips, okay? That's what we're looking at. We're looking at that 5-minute candle. Now, we have ORS, right? We have ORS to qualify our trades. So I want you guys to always think about ORS when you're taking this trade. Look right here. 5-minute MACD cross down, okay? Perfect. We got that 5-minute MACD cross down. So as I'm coming into this trade, I can see that the 5-minute is on a sell. As this thing is if I'm going back to right here, and the trade hasn't happened yet, I'm noticing this. My vortex is on a sell, and my 5-minute MACD is on a sell. So when this candle closed right here, right, I have selling conditions. Now, what else will we want to be paying attention to? Well, we want to also be paying attention to our 15-minute. 15-minute is just crossed over zero line break, bullish. So if this 5-minute is going to sell down, it may be only temporary. That's what you have to have in your mind, that it may be only temporary, okay? Now, let's look at our 1 minute because that's letting us know what's happening right now. So our 1 minute is on a sell. You guys see that? Our 1 minute is on a sell with selling momentum. Now, I'm going to play this out. Watch how our 1 minute crossed back up, okay? 1 minute crossed back up, but then crossed back down with that zero line, okay? Crossed up, then crossed back down. Consolidated for a bit, and then we had that MACD break again. What does this look like? This looks like a retest, a zero line break and a retest. And let's just, out of curiosity, take our fib line and see what just happened. You guys see that? All we did is retest our gold zone. So this trade, right, we got in here for some people, but then some of us may have waited, right? Waited to see if there was going to be some level of retest, because that's all it did. So you can start to combine the stuff that we're using with optimal reversal and our fib levels. Start looking for those for entries, okay? Start looking for those for entries. And as you can see, it retested our fib, stayed below the zero line. Let's check our 5 minute. Our 5 minute is still selling. We can glance at our 15 now. What's our 15-minute trying to do? It's trying to curl down. So I want you guys to just utilize these fib levels. Start training your eyes to see this stuff, right? We pushed on down, and all it did is retest it at our trend line and then came down, right? Came on down, okay? Now, for some of us, right, we got in on that first move, and it's fine. Stop loss needs to go above structure. You can go all the way up there, or you can use, remember what we can always use, our 420. So there's a stop loss that could be here, right? Or when this happened, right, and this came back down, that stop loss can be here, right? Because we had a 420 cross again, and that was the most recent high. Okay? So however you wanted to do it, you could do it. And then just always look left. Look for where the market could stop. So what I've been doing is I've been using fibs on the opposite direction. And notice what we did there. We came right into our ruby zone. Okay? Came right into our ruby zone. That was where it stopped and obviously bought up. And notice how this trade right here, we talked about it was about 50 pips or so, right? Into our ruby zone. But now we're changing gears. Look what just happened. Zero line break. So now we are doing what? What are we doing? We're looking for, do we have divergence? Let's see. Do we have divergence on this or convergence? Let's see what's happening. Okay. We had this low and we had this low. This is what we call convergence. But now what we want to see is we didn't get divergence, but we do have, right? We do have the market starting to do the same thing. MACD is going up while candle price action is going up. That's a very good sign. Also, what happened right here? This is a bearish engulfing candle. We're going to go ahead and identify that zone, right? We're always paying attention to these candles. What did the market do? It closed above. closed above with an engulfing candle out of it, engulfing that area. So this area becomes important. So if I do end up taking a trade, we need to have all of our things in place. Vortex is crossing, MACD has not crossed, but it looks like it's about to. So now we have the cross. If you want to take the trade, right, there's the cross. Where does our stop loss go? Back below the structure where the 420 happened. And now we're in another trade, right? And we're in another trade. What could we have done here? For those that are trading kind of just off the level, being naked trader, once we had that vortex cross and that MACD, if you wanted to do what we talked about off the Ruby, go ahead and just put your stop loss there. And then if you entered in off of this, pretty much this candle, right, your stop loss is down here, okay? So we wait for aggressive rules, we're here. More naked trading with like the first indication that we had would have been here. And then now we're taking this trade on up and we're going to see what it does. All right, so it pushed on up to about here before we had the deep retracement, but you're still talking about 79 pips. If you held it on that retracement, see the market never closed below that, talking about 100 pips. So most likely we got 70, 60-ish pips, okay? But that's what we're working with. Underground Railroad, catch that Underground Railroad trade, but notice what the market is doing. Pay attention to the fib levels. There's a little engulfing candle right here. Market retested it and then dropped. That's all it did right there, which was our gold zone. Came into our ruby zone of that and then pushed up. Okay, so in a consolidated market, there were still some trades there, but we just have to just pay attention. Now, lastly, you wake up and if you want to trade in the morning, we have what's called our L range Underground Railroad. So I'm gonna clear off everything. When we wake up, now we're gonna draw out the first 8 hours of the session day, okay? So we're gonna come over here. First 8 hours of London. We're gonna come over here and look for that London open candle, which happened right here. And then what we're gonna deal with is the first 8 hours, which was right here. So the low to the high. Just like that. Okay, same principle. What are we gonna do? We're gonna identify that last candle, which was here. We're gonna go to the high there. Look at the last lows and go there. And then what do we have here? Now this is an example where we can't get to that last candle there, right? This is a 7:45 a.m. candle in California, 10:45 East Coast. We can't get to that. So like I told you, we're not going to cut candles, okay? We're not going to cut candles. So what we have here is we have a buy on up, right? Some people may have taken that as a 40 pip move on up. But check out what just happened. and this is what we talked about. You guys see this bearish engulfing move, this bearish push down, pretty strong. We get that retracement. Let's sit back and wait for the trades to then hit our zone. So you took this buy up, possibly, right? Made money, but then what happened? It bounced off our Ruby zone. And you guys already know this was actually the trade I took. And then you have a trade coming down, and we just qualified it with our optimal reversal strategy. Okay, I'm not gonna go back through that. But I'm just trying to show you how to think about the Underground Railroad. Okay, coming out of here, just come into it and just draw your fibs and look what happens. Okay, so before we came into our Underground Railroad trade, all this was a buy off of our gold zone. Okay, buy off of our gold zone, continuation out of the break, on up to our Ruby. And then we broke down. Okay, so you guys, it's been a good session. Anybody have any comments or questions before we jump off of here? Besides back testing, anybody got any things you're doing today? Exciting. We did another game night with our cousins. We also did a game night with Daisy and her husband the other day. That was pretty fun. We beat up on them pretty bad. You know, when you tell the story, you can tell it however you want, right? Anybody doing anything special this week? Creative things with your family? I know we all in the house for the most part.
Spades and dominoes, bid whiz.
Okay. I've never played bid whiz, but I've been playing chess lately. I started playing chess when I was 4 in my dad taught me, but I've been getting back into it. We ended up getting a chessboard at the tax office that I work at, and I started getting back on it. Cool, you guys. I'm gonna be doing a lot of back testing, just going through, marking up charts. All I'm really trying to do is train my eye. I'm trying to look at these things like, okay, that's a harmonic right there. I can see that right off of that level. I know that that was a harmonic. I know that this was a fib level. I know that. So I'm just training my eyes, And, you know, I'll be doing that today. But I'll get this training out to everybody. I don't think anybody on this call is someone that wasn't already someone I know. So I have everybody's information. You guys will get the, actually everybody that I text this morning, please just text me one more time your email address. I'm gonna forward it over to Estella. She's gonna get that training out to you guys. So I could just send it one time to her. So everybody, please just text me one more time your email address, and I'm gonna forward that list over to her today, and I'll get this converted. Between last week's training and this week's training, I think we have, like, those are the ones, if you're gonna watch repeats, it'd be this one and that one. Cool, you guys. Everybody have a wonderful, wonderful week. And love and appreciate you guys. Let's get it.
Dale Carnegie said, most of the important things in the world have been accomplished by people who have kept on trying when there seemed to be no hope at all. Arise, champion. Now perseverance transforms average, everyday people into world champions. So the key to victory, the key to success is never giving up. And in order for you to do that, arise, champion, you're gonna need a strong why to prevail, a strong reason to keep going. You see, the more difficult your obstacles are to overcome, the more you must keep your reasons for succeeding in front of you. Vince Lombardi said, The difference between a successful person and others is not a lack of strength, not a lack of knowledge, but a lack of will. Success is not about how you look on the outside. Rise, champion. You might look like a Lamborghini, mean and clean everywhere you go. But see, I'm interested in what's under the hood, because that's what really matters. When life hits you with that brick, and you get knocked down on that mat, and I'm talking to the Linda Rouseys of the world, the ones that have been knocked down once and twice, and everybody out there is calling you a failure, everybody out there saying it's over, what are you gonna do? Rise, champion. I don't even think they should be able to call you a champion until you've been beat, because even losers keep going when they're winning. But when you get hit with that brick and you on that mat on your back, rise, champion. Then we separate the cream from the crop. Only when you're down 25 points on the biggest stage, like Tom Brady, and you come back and we call you the greatest of all time. Abraham Lincoln said, I am not concerned that you have fallen. I am concerned that you arise. Champions make adjustments, not excuses. Get up! The ground, the mat, being on your back is no place for a champion. Get up! Rise, champion. Now you at that crossroads. The decision you make now will ultimately define your legacy. I'm speaking to the Tiger Woods of the world. Each loss, each setback, each heartbreaking disappointment will try to disguise itself as failure, but it's all a lie. And let us not grow weary of doing good, for in due season we shall reap if we do not give up. Many times on the road to success, you're gonna feel crushed, exhausted, and alone. See, life is not like Little League. Arise, champion. They don't give away participation trophies. There's the champions and everybody else. It's one or the other. How do you want to be remembered? Each time life knocks you down, arise, champion. You must bounce back with an even greater hunger to succeed. The ones that have the hardest time doing this are the ones that have weak whys. Now you can only go as far in life as your why will carry you. Champions have self-awareness. They know why they want what they want, and that why carries them to the promised land. The why is the birthplace of all champions. She is the mother to all legends and all the greats in every field. The more deeply you are connected to the thing you're trying to accomplish, the more likely you are to achieve it. Natural talent and ability, that's all good, but it won't carry a quitter. So you gotta find a why that makes you invincible, that you can run through walls with it. Get up! Nietzsche said, he who has a why to live for can bear almost anyhow. And I'm not ignoring what you're going through. Get up! And I'm not gonna sit here and lie to you and tell you it's gonna be easy, because it's not. It's gonna be a struggle. You're gonna have to fight and claw and scrape your way up out of this thing. But you can do it if you wanna do it. Now, are you a pretender or are you a champion? You can't have a testimony without first having a test. The whole world is watching you right now. Get up to see how you respond. Show them what you made of. Never give up.